Hello, hello. Test, test. Got a Broadcom earnings today. I feel like this should be relatively hype. I mean, it's up 2x, over 2x since April. And I mean, if you're looking past the past few years, it's up over 10x. So it should be more hyped than Oracle, I feel like, but we'll see, we'll see. We shall see. That Oracle stream yesterday was a fun stream. That was a fun stream. These earnings call streams are slowly becoming my favorite. Just because you get so many people in the chat, and I don't know, it's funny. It's funny how many people YOLO on the earnings and then get clapped. It's funny. Mooma, what's up, bro? What's up? But that's not for another hour or so. So in the meantime, we got some Seeking Alpha articles on Gamestop, which should be pretty exciting. I think they'll be pretty exciting. I actually want to make a video or a stream clip, I guess, and see how it does. Just because this one has a pretty funny title, and I've been curious to see how if I posted stream clips consistently, how it would go. The last couple videos we posted, they didn't do crazy or anything, but I mean, consistently getting views, that's really all that matters. So, gotta start recording here. We'll wait a few minutes, see if some more people pop in. Skim through it real quick. I just think it's a funny article title. I think it would be a good YouTube video title as well. I wonder, can I? Oh yeah, there we go. There we go. That looks pretty good. Nice. It's a crazy headline. I know. It's a weird headline, that's for sure. It's like, what? Doesn't even make any sense. Oh, man. I'm sure some people will pile in as we go, so let's get it. Do not buy GameStop if you want to sleep well at night by Bella Lakos. It'll be, this is going to be an interesting article. The summary, GameStop remains a sell due to persistent weak fundamentals, declining sales, and unjustified valuation premiums. Weak fundamentals? What? GME's latest quarter saw sales fall 4.5% year over year, missing analyst estimate by 166 million, with international operations still unprofitable. I mean, they were profitable last quarter because of the Switch 2 release. They just weren't profitable this quarter. Significant shareholder dilution and over $4 billion in new debt heighten risk, especially amid uncertain interest rates and speculative Bitcoin exposure. It's $4 billion and 0% debt. Like what? Does this guy know what 0% interest rates mean? When you get debt on 0%, I don't think this guy understands that. I see no near-term catalyst for improved consumer sentiment or operational turnaround. GME's premium valuation is unsupported by fundamentals. What? No way. The fair value of GameStop is somewhere around $20, and your shareholder equity is around $13. So I don't agree with this already. But interesting. Very interesting. Let's get into it. I lose sleep thinking about ways to buy more GME. Same. On God. On God, same. GameStop is a retailer of games and entertainment products in the United States and internationally. The firm went through a lot of ups and downs in the past 5 years, and also became one of the first, quote, meme stocks driving the interest of speculative investors. I started covering GameStop back in 2022, initiating coverage with a sell rating, which I maintained ever since, The reason for my bearish rating was the speculative nature of the stock and the poor business fundamentals. Ah, so this is just someone who's been bearish on the stock forever and they won't update their model for some reason. For some reason, they can't see that it's turning. Very interesting. This might be a good article, maybe. Maybe. It's very rare that you get a good bearish article, but this could be decent. Since my last writing, more than 3 years passed. In this period, GME lost more than 7% of its market value, significantly underperforming both the S&P 500 and the consumer discretionary sector. If we focus on year-to-date performance only, the picture looks even worse, as the firm lost more than 26% of its market value since the beginning of the year. That's not a bad thing. That means it's lagging behind the rest of the market, and eventually you should see something like this. You see the chart? Last time it was lagging behind everything, and then it spiked and outperformed for like a month or two, and then, you know, went back to lagging. I don't agree. Like, man, that's a weird perspective. How can you not see that it's undervalued based off of this chart alone? That's crazy. In this 3 years since my last writing, a lot has changed, but I believe that the previously assigned sell rating is still valid. In this article today, I'm going to give you the primary reasons why I still believe that it is not worth owning GME stock. The focus will be on the latest quarterly earnings results, as well as on macroeconomic environment. To conclude the article, I'll also discuss the valuation of GME stock based on a set of traditional price multiples, macro and microeconomics considerations. Okay. I mean, I disagree. I think GameStop's the only stock worth owning personally, so interesting. It's interesting how this guy thinks it's not worth owning at all, but I think it's the only stock worth owning. Very interesting, very interesting. Sales. In the most recent quarter, GME sales came in at $821 million, or 4.5% lower than in the previous year. This figure also missed analyst estimates by roughly $166 million. See, I think a thing this guy isn't taking in consideration is you only miss sales by 4%, but last year there was close to over 1,000 more stores. So they almost met the sales of last year with way less stores. So, man. Oh, man. See, people don't update their models. Bearish people don't update their models. They've just been making money so long, shorting it, that they think they're correct. Or maybe he just doesn't have the full story. Maybe he doesn't know GameStop's closed like 500-600 or more stores. I don't even know the exact number. But it's a fuckload of stores that GameStop has closed in the past year. So it's weird. That's weird, bro. That's weird. It's weird to be bearish because of that when you don't even have the full context of what you're talking about. Income statement. If we break down the sales into segments, we can see that only the United States achieved positive operating income. Australia and Europe are both generating operating losses. There are no figures shown for Canada as GME exited from Canada earlier this year due to the unprofitability of the operation. This proved to be a good move as it allowed GME to improve its margins overall. Looking forward, I would like to see GME either achieve profitability internationally or alternatively also exit Australia and Europe. I kind of agree with them exiting Australia and Europe, but they did make profit on the console release. So, and they should show profitability in Australia and Europe for Q4 potentially, because Q4 is going to be the biggest quarter. So, to focus on one quarter, this guy just doesn't have the full story. Like, his analysis is irrelevant. He doesn't understand what's going on. He completely ignored last quarter when Australia and Europe were both profitable. Or I think Australia lost a little bit, potentially. I honestly don't remember. We can check if we really wanted, you know. We can check real quick. Why not? Why not? So this is the beauty of doing stream clips and not a video by itself, is I can kind of just free ball it. I can kind of just say whatever I want, but mostly. All right, so if we go into last quarter's earnings and we go down to the different countries, wherever it is, you can see Australia made 6 million and Europe made 3.3 million. So he's completely ignoring this quarter and only focusing on one quarter. And that is that's not fair. That's really not fair. It's not. You can't sit and bash one quarter. Q3 wasn't even that good of a quarter, honestly, for GameStop. I was expecting a lot more. So to sit and bash the worst quarter they've had in the past, like, 6 earnings reports, I think that's, I don't think that's fair. I don't think that's fair, bro. But, anyway. So what is driving this poor performance? If we look at the products sold and how the sales develop for the different product types, we can see that hardware and accessories sales fell by 12%, while software sales fell by 24.1%. The only product category which saw an increase in demand was collectibles, which increased by as much as 50%, but still only accounting for 31.2% of total sales. Bro, that's that's insane. What do you mean? That's insane. That's a massive increase on collectibles again. For a pretty not great quarter, a 50% increase in collectible sales? That's pretty amazing. In my view, these figures are no surprise. The consumer is weak, not only in the United States, but globally. Consumer confidence remained very low throughout the year, meaning that people are less and less certain about their financial stability, and therefore are reluctant to spend on non-essentials, discretionary, durable items, just like the ones that GME is selling. Looking forward, I do not see any catalyst that could significantly boost consumer sentiment in the coming months and quarters that could potentially fuel the demand for GME's products. For this reason, I remain bearish on GME from a growth point of view. See, this guy is so uninformed because you have some of the biggest games coming out in the next year or two. And you have the Xbox handheld, I think, that gets released relatively soon. This guy doesn't have all his information. He doesn't know what he's talking about. Which isn't surprising. Most people who are bearish on GameStop, even most people who are quote-unquote bullish on GameStop don't have all the information. Everyone just thinks they know. Balance sheet. If we look at GME's balance sheet, there's also not much to be excited about. First of all, the firm issued billions of dollars of debt in the form of convertible notes, as well as announced a special dividend in the form of warrants. Dude, 0% interest debt, my friend. And the warrants are extremely valuable if you're a shareholder. So, crazy. I see both of these as a significant risk for investors. Issuing debt to increase the cash balance when the uncertainty around interest rate cuts is so high is not necessarily the most sensible move. If GME was to speculate and buy bitcoins on borrowed money, it could increase the risks even further, making the company's fate highly dependent on the Bitcoin price movement. Yeah, but they only bought like 5% of their whole assets of Bitcoin. They're not going to YOLO all their money into Bitcoin. That's not what this is about. And how is issuing 0% debt risky? And how does it have anything to do with interest rate cuts? Interest rate cuts aren't uncertain. They're going to do one cut in 2026, and they're going to do one cut in 2027. And 2025, they did 3 cuts. And that was expected the whole year. I think there was actually 4 cuts expected the whole year, so the fact that they did 3 is very impressive. But interest rates aren't uncertain. You just have to be an educated person and know where to look instead of just thinking you know. Like the Fed Rate Monitor tool on investing.com. You can literally know if they're going to cut rates months in advance. Well, I mean, a month and a half in advance because I think the Fed meetings are every 6 weeks, but still. This shit is not uncertain. If you know anything about economics and you know how to research, none of this stuff is uncertain. 0% interest rate debt is not uncertain or risky. Oh man, this article is kind of triggering me. It's actually insane how people like think they're so educated when they're not. It's actually insane. The way this guy writes, he seems like so certain about what he's talking about, but in reality, he has no fucking clue what he's talking about. And people like take this, some people will read this and actually like think this guy knows what he's talking about, and that's crazy. It's crazy how you can just post a Seeking Alpha article that's complete dog shit. And, oh man, that's crazy that this article even gets put on Seeking Alpha. This article's trash. The significant increase in the number of shares outstanding is also worrying. The dilution of existing shareholders is a serious concern of mine, and I would not be able to recommend owning GME stock as long as share issuance is happening at such a high rate. The warrants make this situation even worse. See, it's funny because I find the dilution extremely valuable. I think being able to buy more shares as someone who consistently only buys GameStop, the more dilution they do, the lower price I can buy shares at. And if you're looking out 5, 10, 20 years, the dilution doesn't matter. Being able to buy more shares at a low price is what's valuable, because once the market actually starts to catch on with this company, or they prove themselves enough to where the market can no longer ignore this company, the dilution isn't going to matter. The dilution is very beneficial to current shareholders because you're able to buy more shares at a lower price. Like, that's crazy. I actually had a comment on the YouTube video I posted about GameStop's earnings. Some guy commented that he thought it was stupid that I liked dilution. And if you don't understand dilution, in GameStop's case, a very profitable business that is already undervalued, then you don't really understand investing. Why would you want to buy more shares of GameStop at $30, $40 when you could buy more at $20 just by having the management be smart enough to dilute the shares just enough to keep the price low? Just enough. They're not diluting like crazy. They're diluting just enough. And sure, they did the convertibles bond. And sure, they did the convertible bonds, but that's 0% debt, bro. That's 0%. That's crazy. This guy is bearish for no reason. He doesn't have all the information. This had to have been written by AI? Probably. If it's not, that's crazy. Like, if this is a real person, that's insane. Last but not least, the fact that Bitcoin performed poorly in the past quarter is also clearly visible in GME's numbers. The value of Bitcoin holdings decreased to $519 million from $528 million quarter over quarter. Who gives a shit? Honestly, who cares? Overall, from a fundamental point of view, I still do not find GME's stock attractive. The macroeconomic headwinds and the lack of positive operating income in the international segments still make the stock unattractive for investors focusing on the longer term. What macroeconomic headwinds? Please, I can't think of the word. Please elaborate on macroeconomic headwinds. What do you mean by that? And lack of positive operating income? They have only made income the past few quarters. That's crazy. They have only made profit, and they have no debt, so every dollar they make goes right back into the business. That's actually insane. This guy has no clue what he's talking about. One could argue that GME could be a speculative play because of its Bitcoin holdings. No? What? But in that case, I'd prefer owning Bitcoin directly, not some sort of proxy. Bro, it's like 5% of their balance sheet. What do you mean? How is it a speculative play on Bitcoin? It's 5% of their balance sheet. That makes no sense. That is actually something a lot of people think, a lot of people put a lot of weight on the Bitcoin for some reason. It's 5% of their fucking balance sheet. 5%! And as they keep growing, it's gonna be less and less. So to have such a big focus on Bitcoin is like actually retarded. Excuse my language, but you have to be actually retarded to put significant weight on GameStop's Bitcoin holdings. Unless Bitcoin goes to zero. If Bitcoin goes to zero, alright, we can have that conversation. But Bitcoin going from 120,000 to 90, I'm sorry, that's not anything. That's nothing, bro. That's literally nothing. Valuation. From a valuation point of view, I'm also not too optimistic. The following table summarizes a set of traditional price multiples and compares GME's metrics with those of the consumer discretionary sector median, as well as its own historic averages where available. It looks like all these are really good. I mean, there's a couple that are like $2, but I don't know what equations they're using to get these. So how relevant are they? You know, how relevant are they if you don't even know the equations they're using to get these numbers? I don't know how relevant they are. We can see that GME stock is selling at a significant premium compared to the sector median across all metrics. Oh, did he just say GameStop's undervalued? Wait, did he just say GameStop's undervalued? That's crazy. I do not believe that this premium is justified. Oh, a significant premium. I see. I read that wrong. My bad. I do not believe that this premium is justified. As highlighted in the previous section, I strongly believe that the company fundamentals, including declining sales, shareholder dilution, and issuance of debt, all makes GME's current valuation unrealistic and unjustifiable. Well, I mean, it's been trading at $20 for the past, year and a half, so I don't think the market agrees with you. I think the market thinks it's worth $20, and potentially more in some cases. If we narrow down the comparison to a smaller peer group, including only firms from the industry, we can still observe a meaningful overvaluation, despite the other firms being fundamentally much stronger. You find me a business that's fundamentally stronger than GameStop, please. Please enlighten me. There's a lot of good businesses out there, but you find me one that has zero debt, and every dollar they make of net income goes back in the business, because there isn't one. There's not a single business doing that. This is a wild article. For these reasons, I do not believe that GME stock is attractive from a valuation point of view, and therefore I do not see it as a value play in any way. To justify the current valuation, I'd like to see consistent improvements in sales, and improving profitability, and a less challenging macroeconomic landscape. All in all, my views remain bearish on GameStop. Well, sir, you need to update your models, and you need to go do more research, because if you're bearish on GameStop from all the things you've just written in this article, it just shows me that you don't have all the information and you have no clue what you're talking about. Key takeaways. Despite beating analyst estimates bottom line, GME sales declined by more than 4%, and revenue came in well below analyst expectations. The firm also significantly increased its number of shares outstanding compared to the prior year, diluting existing shareholders. The issuance of warrants as special dividends do not make this situation any better. While the firm's cash balance increased significantly, it was largely due to debt issued more than $4 billion, which I believe possesses significant risk in the current interest rate environment. If the firm was to speculate with this money on Bitcoin price movements, the risk could even increase further. For these reasons, the current valuation of the stock remains unjustified. I maintain my sell rating on GME stock. Well, Bella Lakos, sorry to say, but you're not very educated. So, I would like to see your portfolio, Bella Lakos. I'd like to see what you're invested in. I'd like to see how you approach the stock market, because if you think GameStop is bearish and it's not interesting from fundamental perspective, oh man, you have a lot to learn, my friend. You have a lot to learn. Crazy. Oh, nice. That was like a 20-minute stream clip. That's fire. That's fire. 20-minute stream clip. That's great. See, I agree with this comment. How anyone can penalize a company for borrowing at 0% interest is unfathomable. Yep. The bonds convert at 28, well above any dilution price. Yeah. See, at least the comment section knows what they're talking about. I probably should have read the comment section for the stream clip, but it's whatever. People in the comment section seem to actually know what they're talking about. So that's good, you know. That's good. That was sick, though. A little stream clip real quick. A little stream clip real quick. I would read the other 2 articles, but I don't have a sub to Seeking Alpha, but at least we have stuff to read for the next couple streams. At least we have some stuff to read. I want to see if I can post this stream clip while I'm streaming without, hopefully it doesn't lag the stream. Video title as well. Let's see. I wonder, can I... Oh yeah, there we go. There we go. Crazy headline. It's not the most convenient thing, posting the stream clip while I'm streaming, but gotta do what I gotta do. Oh man, I'm sure some people will pile in. Do not buy GameStop. All right, that's where it starts. And there's one part I gotta cut out where I went through the balance sheet. I gotta cut out me finding it. I guess I could just do this. Oh wait, boom. You can take away the desktop audio, then it won't be annoying for you guys. Hopefully everyone's doing good though. Looks like we got a few people in the stream. Hope you guys are doing good. Hope you're excited for Broadcom earnings. I've never researched Broadcom, so I'm kind of excited for it. Kind of excited for it. Okay, there it is. There it is. Australia lost a little bit, potentially. I honestly don't remember. We can check if we really wanted, you know. No. Or I think Australia lost a little bit, potentially. I honestly don't remember. He completely ignored last quarter when Oh, what's up, Eddie? How you doing, man? How you doing? I haven't seen that name in here before. I hope you're doing good. Much love. One sec, I'm trying to get this stream clip out real quick. Australia and Europe were both profitable. Or I think Australia were both profitable. Sorry to the people. Sorry to the people. So this is the beauty of doing stream clips and not a video by itself. Is I can kind of just free ball it. I can kind of just say whatever I want. But free ball. If we go into last quarters or did I say free ball? go into last quarter's earnings and we go down to the different countries, wherever it is, you can see Australia made 6 million and Europe made 3.3 million. So he's completely ignoring this quarter.
Okay, almost got it. I just got to cut off the end here.
Or billion, which I believe possesses significant risk. Valuation of the stock remains unjustified. I maintain my sell rating on GME stock. Well, Bella Lakos, sorry to say, but you're not very educated. So, I would like to see your portfolio, Bella Lakos. I'd like to see what you're invested in. I'd like to see how you approach the stock market, because if you think GameStop is bearish and it's not interesting from fundamental perspective, oh man, you have a lot to learn, my friend. You have a lot to learn. Crazy. And you have a lot to learn.
Nice. A little stream clip, bro. All right, let's see how the... What was the title of that shit? How come there's like nobody in the chat today? It always confuses me when we have like 200 people in the chat and then it goes back to normal. It always confuses me. Come on. Do not buy GameStop if you want to sleep well night. That's a good title for a YouTube video as well. Alright. It's gonna take like 6 minutes for it to export. Not bad. Now, I do need this blown up, actually, because I need to... Should I take his... I don't know if I should take his name and put it in the thumbnail. Probably not. Probably should just take this. I don't know how good of a thumbnail that's gonna be. It's kind of small. Let's see. Yeah, that does not look great. That does not look great. And it's even worse if you do that. I think if I do it at 175, I think that'll look better, potentially. The chat's so quiet today. Are you guys okay? Are you guys good? Is everyone good? It says we got like 11 people in the chat, but nobody's talking. It's a little weird. I'll be honest, that's a little weird. See, that looks a little better. I don't mind that. Earnings call waiting room. Ah. Everyone's waiting for Broadcom. Gotcha. Sorry, I'm doing something real quick. Uploading a YouTube video. Which probably isn't the best thing to do while I'm live, but it's the time I need to do it. I can't really... I mean, I could do it after the stream, but... it's whatever.
It's whatever. Looks like you're running up back to where you started in the morning on Broadcom. Should be an interesting earnings for Broadcom. You're sitting at all-time highs, basically. I think it'll be very interesting. I've never actually looked at Broadcom's balance sheet. 1.9 trillion? Wow. That's impressive. That's impressive. 1.9 trillion market cap, huh? But welcome, Wilson. Welcome. Appreciate you being here today. Hopefully the earnings goes your way. They only have 165 million assets and it's a 1.9 trillion market cap. Holy. That's insane. I mean, they did make $14.6 billion last year, or last quarter, or so far this year, I guess I should say. That's crazy. That's massive. 14.6 billion in 1 year? That's huge. That's crazy. Interesting. What is any Broadcom people here? What is like the expected full year income of Broadcom? Because they're already sitting at 14.6 billion. Are they going to be pushing close to 20 billion, or is it going to be more like 16-ish? Because that seems crazy. That's a lot. And 4 of it was last quarter. So they're making like close to 4 billion a quarter, it seems like. So maybe they do push 20 billion for the year. I don't know. Interesting. That's a 1.9 trillion market cap though. That's crazy. That seems insane. Like when you look at something like that, it's like holy shit. Holy shit. 1.9 trillion market cap with 165 million in assets? Like that just... Man, that's weird. Put 1K into 2x leverage? Well, good luck, my friend. Good luck. Hopefully it works out. Let's see. I mean, it doesn't seem like the stream's lagging or anything, so looks like we're good to upload videos while I'm live here. It's such a weird title for an article. Do not buy GameStop if you want to sleep well at night. Personally, I would sleep much better holding GameStop than a 1.9 trillion market cap company that only has 165 million assets. Personally, I feel much safer holding GameStop. Just saying. Just saying. Just saying. I would personally I would be pretty I'd be pretty worried if I was invested in something like, you know, unless you bought Broadcom like earlier this year or like a few years ago, you know, I bet you're crushing, but at this point, I'd be more worried holding this personally. I don't know what tags to put on this. I'm just gonna steal some tags off one of my other videos for now. All right. All right. Can already tell Broadcom is hyped. You got a lot. There's already a lot of views on this stream. This is about to be a massive stream, chat. This is about to be a massive stream. Unless there's a lot of people streaming it. But even then, this is going to be a big stream. Let's see. I'll get ready for the earnings call. If I can find it. Survive and thrive. What's up, bro? How you doing? Oh, I can't find the earnings call. Where is it? Oh, right here probably. There it is. Let's see. Oh yeah. Oh yeah. I don't know if you guys can hear that music. There we go. There we go. All right. Got the earnings call ready. Alrighty. We're all set up. It's just I don't think the earnings call starts for another like 2 hour or like hour and a half probably. Pulling the stop back up. Stocks go up, stocks go down, my friend. Has nothing to do with Larry. But appreciate you being here. I did see Oracle was down a fuckload in the morning, though. It was down a lot. Last time I looked, it was sitting at 198 again. Now it's back above 200 now. But I think it hit like 180. 187 was the low. Yeah, that's when I saw it. Decent bounce back, but still down a lot. You're still down a lot on that. It's Broadcom time. It's Broadcom's time now, though. This is how the stock market works. You know, Oracle's a thing of the past. Even though Oracle was literally 22 hours ago about. It's already a thing of the past. What's up, Elvis? Maybe, oh, you actually bought? Good for you, buddy. Congratulations. You know, since I'm the one that introduced you to the stock, you should be, you know, donating to the stream. Considering I'm the one who introduced you to it. I'm just fucking with you. I don't give a shit. You do whatever you want, buddy. You do whatever you want. I don't know what we do. I guess we can go through some news for a little bit while we wait. I started the stream a little too early. I thought it would take longer to read that article, but it didn't take very long. Oh, you have Costco after hours as well. Lululemon, Restoration Hardware. I think that's Restoration Hardware. So some decent earnings today. I think Broadcom will be the most hyped one though. You got mortgage rate data today. You're still sitting at 6.2%. You've been there for a while now, like 2 or 3 months. Imports are up from last month, but still down overall when you're comparing it to the beginning of the year. Yeah, I mean, it's not bad. It's not like bad or anything. At least it doesn't look bad. Let's see, exports. Exports look great. That damn, almost the highest exports you've ever had. So that looks great. That looks great. Macroeconomic headwinds, my booty cheeks. The economics look pretty good. I'm just saying. You know, I haven't really been keeping up to date with the economics, so I don't know what everything looks like, but looks fine to me. You did get a Form 4 on GameStop, but it was just those like 9,000 shares they talked about in the earnings report for Mark. So nothing special there. No whales. Probably no short interest. No, that's not going to update for another like 2 weeks. Bitcoin's still at 91. Crypto looks like crypto. Damn, Dow hit all-time highs today? And Russell's hit more all-time highs? Holy shit. Holy shit. The S&P and the NASDAQ are still lagging, though. That's crazy, bro. That's so crazy. You're seeing the rotation in real time. You're seeing the rotation in real time. It's very, very rare when you see the Dow and the Russell hitting all-time highs and not the S&P and the NASDAQ. That is very rare. SpaceX report of 2026 IPO is accurate. Oh, that'll be a fun stream, maybe. A SpaceX IPO. That could be a fun stream. Trump willing to seize more oil tanks. Oh yeah, Disney made a $1 billion investment into OpenAI, so now OpenAI can use Disney characters copyright without infringing copyright. I think that's really interesting. It makes me feel like Disney's trying to go down the route of just making shitty AI shit now, but we'll see what the future looks like there. That's really weird. We can check out this article real quick. It's about Broadcom. EPS is supposed to be 1.86. Revenue is supposed to be 17.49. Wall Street's expecting Broadcom's overall revenue to increase 25% in the quarter. Analysts are expecting the chipmaker to guide for 1.95 in adjusted earnings per share on 18.27 billion in sales. Report comes as investors increasingly see Broadcom as a well-placed to capitalize on the AI infrastructure boom, both with its custom chips, which it calls XPUs, and the networking technology needed to build massive data centers where thousands of AI chips work as one. Broadcom stocks at all-time highs. It's climbed 75% so far this year. As its custom chips, such as Google's Tensor processing units, are increasingly seen as a rival to NVIDIA's AI chip. Company has a market cap of 1.9 trillion, which is insane. Google released its latest AI model, Gemini 3. Another Broadcom AI customer is OpenAI. The AI startup said in October that it will start deploying custom chips for the AI developed with Broadcom starting next year. Broadcom CEO Hock Tan is expected to discuss the company's pipeline of AI chips and partners with investors on Thursday. We expect investors to focus on fiscal year 26 AI revenue guidance, Google and OpenAI revenue contributions, and gross margin trajectory given the steep ramp of custom XPUs. He has the equivalent of buy rating on the stock. That's crazy. I personally would never buy Broadcom, but you know, maybe a few years ago it would have been an interesting investment, but I don't know how interesting it is anymore. I don't know. There's 13 people in here. How many people are actually like Broadcom investors, and what are you still bullish? Like, I'd be curious. Does anyone have any information to put out in the chat about Broadcom? Holy shit, 65 of corporate Bitcoin treasuries are underwater. Yep. As if we didn't call that. Never heard of it till today. I've heard of Broadcom before. I've just never really researched it. I was hoping there was going to be some Broadcom investors in here to talk about it, but probably won't be until later. What's up, Ron? I'm not an investor yet. What's up, Ron? Michael Anthony, do you do anything besides come in here and like promote trash companies? You know, I won't even ban you this time because you actually gave like a little bit of analysis here. But you could just say what's up. You know, you could just say hi. Nobody's going to invest in anything you put in my chat, so it's kind of a waste of time. You could just say hi. You could just say what's up, you know? Jeremy, what's up, bro? How about those GameStop awards? They were interesting. I thought it was pretty sick. I think it's dope that they got all those influencers to collab on one thing. It's pretty cool, but overall, I don't know, I didn't find it that great. I didn't think it was that interesting. The only thing I thought was interesting was all the influencers. Like, that was crazy how many influencers they got to collab for that. But I thought it was going to be more talking about people like actual GameStop content creators, but it was just the greatest marketing thing ever with the biggest streamers and YouTubers in the world. Like, you know, I'm not hating. It's a genius idea. I just thought it was going to be more for the GameStop community rather than just the greatest marketing thing ever. GameStop's been crushing on their marketing. Absolutely crushing. But hope you're doing good, Jeremy. Glad to see you. Isaiah, What's up, bro? What's up? If they got all those guys on board for when Power Packs actually goes live, could be fun times. Yeah, for sure. I think a lot of people don't want to promote gambling, but either way, you know, the fact that they were able to get all those creators to collab for that was really cool. What does this say? YouTube CEO says the platform will proceed with expanded AI moderation. AI will enable a new class of creator. Oh yeah, I read about this. That shit's ridiculous, bro. The YouTube CEO's response to the AI moderation is crazy. Awards were Ryan Cohen's best troll. I'm still lolling. It was interesting. It was interesting. You got the Game Awards tonight too, so I think that was the one thing I thought was really interesting was they announced Elder Scrolls 6, and I'm pretty sure that's the first announcement of Elder Scrolls 6. And they were supposed to announce Elder Scrolls 6 today on the Game Awards, but somehow GameStop was able to be the first people to announce Elder Scrolls 6. Like, I think that's really cool. Because I don't think there's ever been an announcement for that game until yesterday. Well, I mean, a few years ago, I think they announced it, that they were going to start making it, but that's your first, like, real announcement of the game. So I thought that was really cool, that they were able to be the first person to announce that. That was probably my highlight of the awards. Ratchet and Clank Captain Quark's voice actor dies. Jim Ward. That's sad. Ratchet and Clank was a fire game. Japan bans hundreds of drivers for cycling drunk. What? Okay. Okay. Drinking and peddling. ChatGPT users can now edit images with Adobe Photoshop for free. What? Adobe's bringing Photoshop and more of its creative tools directly into ChatGPT, giving users the ability to run edits and design tasks through the chatbot. Company confirmed that features from Photoshop, Express, and Acrobat are now integrated with ChatGPT. Users can now ask the OpenAI chatbot to edit images, modify PDFs, or animate elements, with Adobe's tools running the task behind the scenes. Adobe says ChatGPT users can now make targeted Photoshop edits, remove or blur background, adjust exposure or brightness, and apply effects. ChatGPT will surface sliders to fine-tune intensity levels during the edits. With Express, users can request theme creatives, pull designs from Adobe's library, animate elements, and edit templates. Acrobat support lets ChatGPT merge files, extract or edit text, or pull tables from PDFs. If users want more control, ChatGPT will offer an option to continue the project inside Adobe's apps. Company says the features are rolling out globally. Photoshop, Express, and Acrobat are available on ChatGPT for desktop, web, and iOS. On Android, only Express is supported for now, with Photoshop and Acrobat coming soon. Man, that's crazy, dude. That's crazy. The rollout follows a string of Adobe AI releases this year, including AI assistants for Express and Photoshop, and a preview of its cross-app project Moonlight tool. ChatGPT first open, blah, blah, blah. We don't need to read that. Interesting. I'll have to try to edit a thumbnail on OpenAI one of these days, I guess. What the fuck? Kim Kardashian's gonna be a Fortnite character? That's ridiculous. That's ridiculous. Baby, how are you not a hobbit? You know when you went on that quest to slay that dragon? No, she said it was a Quiznos, and she ate a sandwich. That is why my wife is not a hobbit. Baby, how are you not a hobbit again? Yeah, but you always have that pipe and you're blowing the rings and... Oh, okay, okay. Okay, I love you. Markiplier's Iron Lung movie picked up by AMC. Interesting. Okay. What is going on here? The Game Awards 2025. How to watch and what to expect. I might watch. I think I watched last year, if I'm not mistaken. It starts the same time as the GameStop Awards, 7:30 p.m. Eastern Time. I don't know if I'll stream that or not. I'm not sure. I'm not sure that I'll stream that. We'll see. We'll see. Last year's was pretty good. They had a lot of good games. Lots of good games. What is this? Prediction market gamblers can't believe they just lost a 20 million bet on a technicality. Time Magazine revealed its Person of the Year for 2025. It wasn't one person, but many different people who are all on the helm of pushing AI technology. This caused some prediction market gamblers who had a bet on AI itself earning the distinction to start yelling a lot online. It's funny, but also a horrible glimpse at our bet on everything future. Time Magazine revealed annual Person of the Year cover. The long-running magazine, blah, blah, blah. Normally, I'd think about Time picked the person for about 10 seconds and then move on with my life, but this time, who they picked and use of two different covers have caused chaos among people who love to bet on everything. Interesting. That's funny. On the prediction market web Kalshi, nearly 20 million worth of betting happened over the who would be Times Person of the Year. One popular option that many bet on was AI. So when Kalshi called the bet and listed the specific people the magazine had named the architects of AI as the winners, but not AI itself, a lot of people were angry. They believed that AI was also the winner as it was named directly. Making things more confusing, Time Magazine ran two covers of the Person of the Year issue this year, one featuring the architects with the other featuring AI in massive letters through the words, "The Architects of AI," are still present in the cover's corner. Still, this cover is more evidence, according to those who bet on AI, that it too should be considered a winning outcome in one of the site's biggest bets of the year. That's a crazy thing to bet on. We live in a weird world, bro. Like, never in my life would I ever, think to go bet on the Person of the Year. Like, we live in a weird world. We live in a weird world. Like, sports betting's bad enough. Now we're betting on the Person of the Year. Okay. while I'm definitely laughing at how many people lost money betting on Times Person of the Year, I'm also aware that this is our future. This bet on everything shit is growing quickly. This is just the start. Financialize everything and create a tradable asset out of any difference of opinion, what we love, believe in, cherish, hope for, fear, etc. In the near future will be something to bet on. It's only going to make it easier for the growing number of young people addicted to online gambling to lose even more money. And the arbitrators of how these bets are settled and who wins will be the tech bros. The betting on your debt or whatever was wild to see. Yeah, that was a weird. That's the future. That's the future, bro. You know it's a interesting thing though. I think I'm sure I've talked about this before, but back during the election, they had Kamala Harris being the favorite to win, and if you bet on Trump, you would have won like is like 2-1 or like 3-1 odds on Trump. And then a couple months later, Trump started to become the favorite to win the election. But if you would have bet on Trump when nobody thought he was the favorite, you would have only won like 2-1, 3-1. But if you would have bought Trump media on the stock market, you would have made like a 7-8x or something like that. So it's kind of interesting how people would be betting on this trash when there's better vehicles for these bets, or at least a bet like that. There's a lot better vehicles. But that's just one bet. But I don't know. I personally would never go and bet on something like that. Future since they banned online poker. Wait, online poker's banned? Since when? Since when is online poker banned? I didn't know that. I didn't know that. Skyrim on Switch 2 is 53 gigs. Good lord. What? Mortal Kombat suffers fatality, gets dropped from the biggest fighting game tournament of the year. Why did it get banned? Evolution Championship Series, another piece of gaming culture that was recently sold in part to Saudi Arabia. Why is Saudi Arabia buying everything? Brings fighting game pro. Doesn't say why it got banned. I'm not getting back in. Yeah, it doesn't say why it got banned. Weird. Why is everyone why is Saudi Arabia literally buying everything? Like, that's so weird. Magic the Gathering reveals 38 Marvel superhero cards. Oh yeah, isn't there a Marvel? Yeah, Marvel superhero set. Next June. No, that's a while away. Netflix considers Warner Bros. Games to be pretty much worthless. What? It looked like it would be good for game players. Warner Bros. It didn't even factor in the $83 billion deal. It apparently considered to add nothing to the company's overall value because they're relatively minor compared to the grand scheme of things. when is the earnings? After the stock market is closed. And then the earnings call is in like an hour or something. PlayStation Store leak finally confirms Leon is in Resident Evil Requiem. That's sick. That's sick. Masked Gang steals 100,000 of Pokemon cards. Do they have a video of it? Don't look like it. It don't look like it. I like watching. What the heck? This is a Trade Anything Day article. When you ask people to give you their junk in exchange for a $5 coupon, they will happily do so. And if it's GameStop asking, they'll apparently take it even farther, trying to pawn off sex toys, pets, and literal garbage in exchange for store credit. That's valid for other garbage like Funko Pops. The meme stock retailers Trade Anything Day led to viral stunts and some big headaches for the people who had to work during it. The rules precluded customers from bringing in stuff like hazardous chemicals, medications, and certain electronics like MetaQuests, but encouraged them to trade in bizarre paraphernalia like taxidermy animals. Perhaps unsurprisingly, some people did exactly that. GameStop shared images over the weekend of what looked like a stuffed bobcat and a half-chewed goose, but those weren't the only random artifacts pawned at the gaming retailer on December 6th. Other customers reportedly turned in a Netflix disc for installing the streaming service on a Wii, gift shop replica of the Declaration of Independence, and a plastic spoon. Bizarre curios that GameStop rejected include someone's social security card and some guy's dog. They said no, joked Pokemon card loot box. Interesting, he got his own Dexerto article. I wonder how much he paid for this article. Because I'm pretty sure you have to pay to get an article on Dexerto. But while the video game chain was clout chasing on social, employees in stores had to manage the stunt's awkward fallout. My Trade-In Anything Day didn't start out bad. A few odd 3D printed items, shoes, etc. One staffer who said they were just hired back in September wrote on the GameStop subreddit, I then have a man come in with a large bin filled with video games. He tells me the video game store down the street told me I had too many for them, so I came here. The employee continued, I'm not even kidding, he had at least 100 games, and I'm like, okay, I'm scanning the games, opening them, checking them out to make sure they're correct, blah, blah, blah. Inside is incredibly graphic adult film disc. Another apparent staffer said someone tried to trade in a dildo. Someone come to the store, they fully slapped it on the table. There were a lot of kids in the store, so I got upset and kicked him out. Word got to my DM, and apparently my RM is blaming my whole store and DM for crashing out and letting this happen. What the hell? One customer drew a face on a leaf. GameStop declined that trade-in. Another brought in a piece of lint. GameStop did not decline that. Absolutely bunkers, the person wrote. Food items were fair game as long as they weren't immediately perishable. In fact, some stores said they were encouraging players to bring in canned goods that would be easily donated to a local food drive. That resulted in everything from Pokemon Campbell's soup to Vienna sausages. Someone even got $5 store credit for tangy barbecue McDonald's sauce. What the fuck? Best trade in all was a thank you note written on a Kirby post-it to the dudes at GameStop. I hope your day has been well, it read. I'm sorry that they are trying to trade in garbage. That sucks, and I hope no one in the area did that. I also hope you're doing... I hope you're doing well. Outside of GameStop, stay sane. Happy holidays. This is worth so much more than $5. Okay. Streamer awards were a reminder of how streaming rewards bad behavior. There were some genuinely touching moments like Adorable Grandma and Jigsaw Puzzle Aficionado I Just Love Puzzles winning the Hidden Gem Award, and a touching speech from the best breakout streamer, FaZe Adapt. But the Streamer Awards was mostly 3.5 hours of people regularly rewarded for behaving badly doing just that. If you aren't privy to the interpersonal drama and controversy surrounding the professional streamer space, that's okay. I wish I could eternal sunshine of the spotless mind a lot of the information from my head. Just know that in the months leading up to the 5th annual awards, host QT Cinderella has broken down on her stream, citing stress around organizing the event. While other streamers accused her of rigging the ceremony, it was a special brand of drama farming and rage baiting that has come to define the streamer space. Just like earlier this year at San Diego's TwitchCon, during which streamer blah 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 blah. Multiple clips circulated on some weekend that are pungent reminder of how young and in many cases small-minded some of most of the popular streamers are. 17-year-old streamer known as Ray K got a 2-year suspension stealing flowers from Walmart while live. Approached a married lesbian couple while live streaming to ask if they were gay. Not long after asking a woman streamer if she had a man. What? I don't want to read this. I don't fucking care. I know streamers are terrible. There's a decent amount of news today. I'm just not really in the news reading mood. Market's almost closed though, so should be getting Broadcom earnings pretty soon. One sec. I forgot to make this video public, even though I don't know. We'll see how it does. We'll see how it does. I'll be curious to see how it does. What a great promotion. It was an interesting one, that's for sure. It was a really good promotion, actually. Very unique. Same with the GameStop Awards. Very unique promotion. What did I take away from the award show? What do you mean? It was an award. I don't know what you mean by that. I didn't take away anything. It was just an award show. It was just entertainment. I don't really know what you're asking. It was just entertainment. Instagram will let you control which topic its algo recommends. Oh, that's genius. That's really smart, actually. I think they should regularly make content like that. It was hilarious. I mean, what else would they do, though? I don't think there's really many events like that. So I don't really know what else they would do. Beast Games Season 2 in January announced just after the announcement that he's making a bank. I saw Beast Games. I saw the Beast Games announcement. I actually just finished watching the first Beast Games like a month or so ago. It's actually really good. I really enjoyed it. I'm sure Beast Games 2 will be even better. Maybe. Beast Games 1 was pretty fucking epic, so it's going to be hard to top, I feel like. Influencers make videos, toss on a YouTube channel, kind of like how LTT is. I don't know what LTT is. But, I mean, I think it would be cool if they made more commercials and stuff with influencers and posted it on their YouTube channel. I wonder if they posted any of the commercials on their YouTube channel. They posted in the one with the chick. So they need to post all those commercials onto here. Because this is the best video they've posted. The one with the chick. Like, imagine if they posted the one with Asmongold, Amiru, and Tectone. That would get hundreds of thousands of views. I don't know why they posted this one. They should have posted the Asmongold one and the Amiru and Tectone. But yeah. Instead of doing these stupid, like, commercials and stuff, they should be making GameStop exclusive commercials with creators and shit. That'd be a good idea. But they don't listen to me. So it doesn't really matter. I loved it. Yeah. First Beast Games was so good. That coin flip was crazy, bro. That coin flip was crazy. What's up, Tracy? Haven't seen that name in here before. Hope you're doing good. Looks like people are starting to come in here for the Broadcom earnings, so we'll get that ready. Still sitting around 408 on Broadcom. Price really hasn't moved. I don't do morning live trade. I just stream when I feel like it. Lately it's been more later in the day, but no, I don't gamble on the stock market, so I don't trade often. Only trade when there's money to be had. Funny game review videos / product review videos would be fire. I just think making videos with other creators is probably their best move. I mean, it shows. It definitely shows. A lot of their videos only get like a few hundred views. But then you have the GameStop awards get 90,000 views, and then that video with that random girl, the 10,000 views. Like, they had so many influencers on the GameStop awards. There's probably like 1 million views worth of clips from that, and they're not posting it for some reason. Doesn't really make sense, but whatever. That's all that matters. Nah, that's just so. I disagree. I disagree. I'd rather have some sweaty male streamer who gets hundreds of thousands of views, or post a video about some sweaty male streamer who gets hundreds of thousands of views over whoever the hell that is. I disagree. If it beats earnings, any chance of Oracle recovering? What is Broadcom and what? Oracle is a completely different stock. That is a weird question. I feel like that's a weird question. If Broadcom, even if Broadcom beats earnings, it doesn't mean Broadcom's gonna go up. So I feel like that's a weird question. Earnings is a complete flip of the coin, whether the stock goes up or down. Doesn't matter if they beat or not. Doesn't matter. Even one tech stock earnings moves another, like Planter and Nvidia. Then how was Oracle down 15% and Broadcom is still at all-time highs? If what you're saying is correct, please explain. I don't, yeah. You have a lot to learn, my friend. You have a lot to learn. You're new? That makes sense. Like, yeah, you know, if certain tech stocks are going up, you could expect other tech stocks to be going up, but it's not always the case. It's not always the case. And also, even if a company beats earnings, it doesn't mean the stock is going to go up. They could post the best earnings they've ever posted and the stock can still go down. It's not a 1 + 1 doesn't always equal 2 in the stock market. The stock market's its own beast. I've noticed that a lot recently from these earnings calls. A lot of people, for some reason, think that just because the business is doing good, it means the stock should be doing good, but that's just not how it works. The stock market is the stock market, and the business is the business. And they're, in some ways, they're correlated, but they're really not. Maybe, you know, on a long enough time frame, if you're looking out 5, 10, 20 years, you know, they probably a little more correlated, but in the short term, it's not really correlated. The Fed starts buying tomorrow? I don't know what you mean. Buying what? What are they buying? T-bills? They've been buying T-bills. They've been buying T-bills, if I'm not mistaken. But that doesn't really, unless you're betting on bonds, it doesn't really benefit much. They announced yesterday they'll start buying short-term ones. I thought they were already buying. I remember reading about that, but I thought they've been buying. I don't think that's new. If it is new, then I guess it's new, but I thought they've been buying this whole time. All right, market's closed, so you should get the Broadcom earnings coming out here in a little bit. Their website isn't the greatest. Not the greatest website here. I'm guessing we can check Twitter too, I suppose. How is there over 100 people in here, but like no chatters? That's weird. Isn't that weird? I feel like that's weird. The earnings should come out here in a little bit. The call doesn't happen for an hour though. Everyone's got to be at work. Maybe. It's possible. Make sure you guys hit that like button if you want the earnings call. Over 100 people, over 120 people here and only 13 likes. You guys need to run it up. You guys need to run it up. That is nowhere near enough likes. That's crazy. That's crazy. What are your guys's bets on Broadcom? I know there's a lot of option degenerates out there, so what are you guys betting on this? And is there any investors out there? Are there any actual Broadcom investors, or is it just a bunch of option degenerates in my chat? Please let me know. Let me know. There's 150 people in here, so there should be some opinions floating around. Investor, but not Broadcom. 6% increase expected. Broadcom investor, welcome. Mark Twain, maybe you need to get your head out of your ass and you'd be able to listen to what I said. Definitely hit earning. Option degenerate here. Hey, I appreciate the honesty. I appreciate the honesty. Big time Broadcom investor, welcome. Short on the NASDAQ, interesting. Interesting. Well, you can get banned then. How about that? Do I think it's going to go up or down after the earnings report? Grab a coin, flip it in the air, and there's your answer. Sold 420 calls for tomorrow. Nice. 226 will be bearish for our AI because OpenAI will be broke. Okay. Banned for being short on the NASDAQ? Nah, not you. The other guy, or is some dude that some other guy. Here, Ariane, I got you, bro. I got you, bro. Here's your earnings prediction. Here, I got you, bro. I got you. I know what you want. I know you're looking for the earnings prediction, bro. Here, let me get you the right coin here. You need that Nine Tails coin. I know you're looking for that Nine Tails. Heads, it goes up. Tails, it goes down. You ready? Are you ready? There you go. There's your answer. There's your answer. There you go, buddy. I got you. I got you. That's how you predict earnings right there. That's how you predict earnings right there, bro. You just flip the coin. You do Pokemon? Me too. I have very rare cards too. Do you collect? I have a few cards, not a ton though. A lot of my cards are from GameStop power packs, but I don't, not a huge collector. I have some cards, but not a ton. Flip again? That's not how flipping a coin works. You can't just flip a coin. You can't just flip again. Holy shit. There's over 180 people in here, and we only got 20 likes, chat. We need 100 likes. We need 100 likes, chat, so you gotta run it up. You gotta run it up. There can't be 180 people in here and 30 likes. That doesn't make any sense. We need 100 likes, chat. Very nice analysis with that coin flip. I agree, I agree. That's the best. That's quality analysis right there. You just flip the coin. Hopefully you're wrong. Well, I'm not the one who did it. The coin did it. Any PSA? Yeah, that's all I have is PSA cards. I do have like a deck of cards to actually play with, but I haven't played Pokemon in quite some time. It's been a while since I've actually played Pokemon. If I remember right, it's an Umbreon VMAX Alt Art Secret Rare or something. Oh, nice. That's probably a fire card. That's great. Is it graded? You got it graded, or is it just the raw card? Run it. Hey, thank you, Ariane. Thank you, bro. Gave you my like. Do you know when they release the earnings file before the conference? The earnings should come out here in like 5 minutes. The call isn't for another 50. But the earnings should be coming out here in a second. Well, any minute now. I'm pretty sure. Someone in here said at 15. So it should be like 5 minutes. Greetings from Poland. Welcome, Jaku. Welcome. Appreciate you being here. Hey, thank you for being here, Beat Bias. I appreciate you. I've been waiting to board this flight forever. Well, welcome. Welcome. Not graded. I don't live in the US. Ah. Well, hopefully you'll get grading soon. I think PSA is expanding, so hopefully you'll be able to grade soon. Is that a Jordan poster you got? Nah, I'm not from Chicago. I'm just a Jordan fan. I've been a Jordan fan since I was like 3 years old or some shit. But yeah, that's my Jordan poster back there. Why you take the decorations down? I don't know. I want to put up some new ones eventually. I didn't really like having shirts hung on my wall. Did I short or did I buy? I'm just streaming the earnings for you guys. I'm just doing a service for all the investors out there. So make sure you guys hit that like. There's over 200 people in here and only 50 likes. You guys got to run the like button up. That's crazy. But yeah, I'm just here. I'm just here doing this service for you guys. Hosting the earnings call for the people. Greetings from Holland. Welcome, Anton. Welcome. 200 strike, December 26 expiration. Damn. That's a massive, I mean, not a massive, that's a interesting short there. MJ, baby, MJ. What do I think about 2026 market? I'm bullish on markets overall, so. But I'm always bullish. Very rare I'm ever bearish. There has to be a lot of things adding up to be bearish for me. You don't have Broadcom? Nah. I just invest in GameStop. All my money goes into GameStop. I don't mess with these AI. I don't mess with these speculative stocks. I like things that I believe are fundamentally sound. England here. Welcome. Welcome. He's selling likes. Hey, likes are free at least. Greetings from Saudi. What's up, Ibrahim? Greetings. Be nice to have some gains for Christmas. All I want for Christmas is gains. I don't have any Broadcom. No, AMC's trash. AMC's dog shit. I would never buy that. Staten Island pizza. Ireland. Welcome, Ludwig. Welcome. Caribbean. Honduras. Arguello. What's up? How you doing? I was a mod. I would snipe him. What console do I have? PC. And this earnings report should be out. Let's see. Let's see. Looks like you got 18.02 billion revenue and 1.95 earnings per share. Let's see. Let's see if they posted. Where's their report on their website? Where do you find the report? Did the price go up? is it? Yep, you're damn all new high. Wow, 423. That thing is crushing. New highs. New highs on the Broadcom. 420. Killer. Absolutely killer. I'm trying to find the actual report though, but that's your numbers. 1.95 EPS and 18.0 or 0.015 billion revenue. So not massive beats by any means, but your EPS is up 37% year over year. Your revenue is up 28% year over year. EPS is up 15% quarter over quarter, and revenue is up 13% quarter over quarter. So Broadcom is crushing. Sitting around that 420 mark right now, but I'm waiting on the article. Or where's their report? They should. There it is. Found it. Make sure you guys hit that like. Hey, we got 69 likes. Thank you for 69 likes, chat. But we need 100. So make sure you hit that like button. Let's see. Broadcom Inc. announces fourth quarter and fiscal year 2025 results. Revenue of $18.18 billion for the fourth quarter, up 28% from the prior year period. GAAP net income is $8.5 billion for the fourth quarter. Non-GAAP net income is $9.7 billion for the quarter. Adjusted EBITDA of $12.2 billion for the fourth quarter, or 68% of revenue. GAAP diluted EPS of 1.74 for the fourth quarter. Non-GAAP diluted EPS of 1.95 for the fourth quarter. Cash from operations of $7.7 billion for the fourth quarter. Less capital expenditures of $237 million. Resulted in $7.46 billion of free cash flow, or 41% of revenue. Quarterly common stock dividend increased by 10% from the prior quarter to 0.65 per share. First quarter fiscal year 2026 revenue guidance of approximately $19.1 billion, an increase of 28% from the prior year period. First quarter fiscal year 2026 adjusted EBITDA guidance of 67% of projected revenue. Broadcom, a global technology leader that designs, develops, and supplies semiconductors and infrastructure software solutions, today reported financial results for its fourth quarter and fiscal year ended November 2nd, 2025, provided guidance for its first quarter of fiscal year 2026, and announced its quarterly dividend. In Q4, record revenue of $18 billion grew 28% year over year, driven primarily by AI semiconductor revenue increasing 74% year over year. We see the momentum continuing in Q1 and expect AI semiconductor revenue to double year over year to $8.2 billion, driven by custom AI accelerators and Ethernet AI switches. We forecast Q1 2026 total revenue of $19.1 billion and adjusted EBITDA of 67%. In fiscal year 2025, adjusted EBITDA increased 35% year over year to a record $43 billion, and free cash flow was strong at $26.9 billion. Based on increased cash flows in fiscal year 2025, we're increasing our quarterly common stock dividend by 10% to 0.65 per share for fiscal year 2026. The target fiscal year 2026 annual common stock dividend of 2.6 per share is a record and the 15th consecutive increase in annual dividends since we initiated dividends in fiscal 2011. Wow, that's pretty impressive. The company's cash and cash equivalents at the end of the first fiscal quarter were $16.1 billion, right? Yeah. Compared to $10.7 billion at the end of the prior fiscal quarter. During the fourth fiscal quarter, the company generated $7.7 billion in cash from operations and spent $237 million on capital expenditures, resulting in $7.4 billion of free cash flow. On September 30th, 2025, the company paid a cash dividend of 0.59 per share, totaling 8 billion almost. The differences between the company's GAAP and non-GAAP results are described generally under non-GAAP financial measures, blah, blah, blah. First quarter fiscal year 26 business outlook. Based on current business trends and conditions, the outlook for the first quarter of fiscal year 2026, ending February 1st, 2026, is expected to be as follows. First quarter revenue guidance of approximately 19.1 billion, and first quarter adjusted EBITDA guidance of 67% of projected revenue. The guidance provided above is only an estimate of what the company believes is realizable as of the date of this release. The company is not readily able to provide a reconciliation of projected adjusted EBITDA to projected net income without unreasonable effort. Actual results will vary from the guidance, and the variations may be material. The company undertakes no intent or obligation to publicly update or revise any of these projections, whether as a result of new information, future events, or otherwise, except as required by law. Company's board of directors has approved a quarterly cash dividend of 0.65 per share. The dividend is payable on December 31st, 2025 to stockholders of record at the close of business on December 22nd, 2025. Broadcom will host a conference call, which we will check it out. Okay. And they don't have much more here. We don't have much more here. We can check out Costco earnings real quick while we wait. It looks like it's still sitting at 416, so you're still up on that. Still looks good. Let's check Costco earnings. Why not? Why not? We got nothing better to do. We're still got a while till the Broadcom earnings call starts. Let's see. Net sales for Costco announced its operating results for the first quarter of fiscal 2026. Net sales for the first quarter increased 8.2% to 65.98 billion from 60.99 billion last year. Comparable sales for the fiscal 2026 were as follows. Excluding the impacts, blah, blah. Net income for the quarter was 2 billion, 4.5 per diluted share, compared to 1.8 billion, 4.04 per diluted share last year. This year's results included a tax benefit of 72 million, 0.16 per diluted share, related to stock-based compensation, which last year was 100 million, 0.22 per diluted share. Costco currently operates 923 warehouses, including 633 in the United States and Puerto Rico, 114 in Canada, 42 in Mexico, 37 in Japan, 29 in the UK, 20 in Korea, 15 in Australia, 14 in Taiwan, 7 in China, 5 in Spain, 3 in France, 2 in Sweden, and 1 each in Iceland and New Zealand. Costco also operates e-commerce sites in the US, Canada, UK, Mexico, Korea, Taiwan, Japan, and Australia. Well, Costco doesn't give you as much as Broadcom did. They don't give you much. But it's probably because they want you to listen to the earnings call. Last quarter's earnings call for Costco was actually pretty good. It was actually pretty good. Oh, okay, that's not up then. Costco pumping too. What's Costco at? Oh, Costco's down actually. You got a little excited a little too quick, it seems like. Didn't RH have earnings as well? Yeah. Up a little bit. They haven't posted anything on their website though. That's weird. That's weird. You would think they would post on their website, but I guess not. Oh yeah, Lulu, huh? Lulu does have earnings today. You right. We can check Lulu. Lululemon. I like me some Lululemons. Damn, it's up a lot. Up 9%. Lululemon's crushing. Let's check that. Lemon Investor Relations. Where's... right here. Do they not have a thing? Financial supplements? Gotta be this, right? Okay. Total net revenue increased 7%. Total net revenue was $2.6 billion in Q3 2025 compared to $2.4 billion in Q3 2024. Global comparable sales increased 1% or 2% on a constant dollar basis. The increase in net revenue was primarily due to the increased China mainland and rest of the world net revenue, partially offset by decreased America's net revenue. America's net revenue decreased 2%, comparable sales decreased 5%. America's net revenue was $1.7 billion, or 68% of total net revenue, compared to $1.8 billion, or 74% of total net revenue in Q3 2024. China mainland net revenue increased 46%, or 47% on a constant dollar basis. Comparable sales increased 24%, or 25% on a constant dollar basis. China mainland net revenue was $465.4 million, or 18% of total net revenue, compared to $318.3 million, or 13% of total net revenue in Q3 2024. Rest of the world revenue increased 19%, comparable sales increased 9%. Rest of the world net revenue was $367.2 million, or 14% of total net revenue, compared to $307.9 million, or 13% of total net revenue in Q3 2024. New company-operated stores. We opened 6 new stores in China mainland, 3 net new stores in America, and 3 new stores the rest of the world in Q3 2025. Total company-operated stores at the end of Q3 2025, we had 796 total company-operated stores, compared to 749 at the end of Q3 2024. Gross profit was $1.4 billion, or 55.6% of net revenue, compared to $1.4 billion, or 58.5% of net revenue. In Q3 2024, gross margin decreased 290 basis points compared to Q3 2024. The decrease in gross margin was primarily the result of a net decrease in product margin of 300 basis points, comprised of a net decrease of 290 basis points primarily from higher tariffs, as well as markdowns and credit card affiliate programs, partially offset by higher pricing and lower product costs, and an unfavorable impact of foreign currency exchange rates of 10 basis points. The decrease in gross margin was also due to a net decrease in fixed costs as a percentage of net revenue of 10 basis points. SG&A expenses were $988.3 million, or 38.5% of net revenue, compared to $909.8 million, or 38% of net revenue in Q3 2024. The deleverage of 50 basis points was driven by 110 basis points of deleverage from our operating channel, costs driven by increased employee costs, and 30 basis points of deleverage from depreciation and amortization, partially offset by 90 basis points of leverage from corporate SG&A expenses driven by decreased incentive compensation. Operating income was $435.9 million, or 17% of net revenue, compared to $490.7 million, or 20.5% of net revenue in Q3 2024. Other income expense net decreased $7.9 million to $5.9 million from $13.7 million in Q3 2024, primarily due to a decrease in interest income as a result of lower average cash balances and lower interest rates. Income tax expense was $134.9 million compared to $152.5 million in Q3 2024, and the effective tax rate was 30.5% compared to 30.2% in Q3 2024. Net income was $306.8 million, or $2.59 per diluted share, compared to $2.87 per diluted share in Q3 2024. Our diluted share count for the quarter was 118.6 million compared to 122.8 million in Q3 2024. In Q3 2025, we repurchased a million of our shares for a cost of $189 million. On December 3rd, 2025, our board of directors approved a $1 billion increase to our stock repurchase program. Including this increase as of December 11th, 2025, we had approximately $1.6 billion remaining authorized on our stock repurchase program. Capital expenditures were $167.4 million in Q3 2025, compared to $178.5 million in Q3 2024. Q3 2025 capital expenditures primarily relate to investments that support business growth, including our multi-year distribution center project, store capital for new locations, relocations, and renovations and technology investments. Cash and cash equivalents were $1 billion at the end of Q3 2025, and the available capacity under our committed revolving credit facility was $593 million. Inventories increased 11% to $2 billion at the end of Q3 2025, compared to $1.8 billion at the end of Q3 2024. On a unit basis, inventories increased 4%. Okay. So, Lulu did I. Bruh, you're the one who told me to look into Lulu. Now you're getting banned. Now you're getting banned. Don't tell me what to do. This is my stream, boy. I'll do whatever the fuck I feel like. If you got a problem with it, get the fuck out. Alright? Alright. And there's nothing going on with Broadcom for another 25 minutes. Earnings call doesn't even start for a while. It's just playing music right now. Damn, Lulu is ripping, son. That is crushing. Almost up 11%. What else had earnings? Costco's barely down. And Broadcom. You're at 419 on Broadcom, so still up a decent amount on that. I swear RH was today as well, isn't it? Maybe that's tomorrow. No, RH was today. It's just they just either haven't released it yet or it just didn't move. Okay. I don't know what we're going to do for the next 20 minutes, but we're here. Make sure you guys hit that like button if you have not. And if you're interested in stock earnings, companies' earnings, whatever, make sure you subscribe. We review these earnings calls and the earnings whenever they're happening, so if you're interested in earnings, then you want to be subscribed. Polymark has a bet whether AI will be charged with a crime by 2027. Well, what are the odds on it? What are the odds on something like that? Probably pretty high, I'd imagine. 50-50? Interesting. I would never make that bet, but it is an interesting one. You can bet on anything in today's world, man. It's crazy. It's crazy. You can literally bet on anything. And the crazier part is people actually do it. The market wouldn't exist if people didn't actually do it. That's the crazier part. Not only is it crazy that you can bet on anything, people actually do it. Alright, appreciate you stopping in, Jeremy. You have a good rest of your day, bro. Much love, man. I appreciate you. Just trying to push back past 420. A lot of resistance there, it seems like, but Broadcom is it's crushing. Can't deny that it's not that it's crushing. Only hits all-time highs. The call is in 20 minutes. Wait, there's that I wanted to check. One of these posts reminded me of it. Oh yeah. Burry. Let's see if he... No. He posted another article, but it's locked. Come on. I just want to read these, man. Why does he gotta lock every article? I just want to read it. I'm not paying $400 a month to read your fucking Substack article. That's too much. Yeah, here's a part of it. How can you know the bubble pops now or in 1 or 2 or 3 or 4 or 5 years? Shorts, time is an adversary. Shorts, time is an adversary. Longs, time is your friend. I could not agree more. Shorts are almost always short-term trades, usually less than a year, maybe a couple of years at most. That is if they are working. If they are not working, usually days or weeks, sometimes hours. Not 5, not 10 years. My CDS on RMBS trade just prior to the GFC was a special case, and today is not. All short sellers know today, even if they did not know 5, 10, 20, 30 years ago, that a gamified meme stonk market is a very hot kitchen for shorts. Most people cannot stand that heat. Most with a short in mind should not even go near the kitchen. I believe today the stock market is in a phase that could become a blow-off top of extreme magnitude on the upside, while at any time, maybe even today or tomorrow, making a generational top. There's no way to time or predict a market like this. Even when it finally tops, it will not be for any specific reason, even if the reason is an AI build-out bubble popping. That will likely not be apparent until a year or two later. I'd like to read the whole article, though. I don't want to read just a piece of it. Whatever. Whatever. I think it's like 30, or did I see it wrong? I thought it was 400. Maybe it's 400 for the year. But I thought it was like $400. Doesn't even say. You'd have to have an account, I think, for it to actually tell you. I don't have a Substack account, so I don't know. But either way, I wouldn't pay $30 to read that article either. I just want to read it. It's not going to benefit me in any way. I'm just interested in the article. How do we have like over 100 people in the chat and just like no chatters? Nothing. Very weird. Very weird. But earnings call starts in like 15 minutes. Multitasking? No. It's probably what everyone's doing then. I forgot we live in goldfish attention span times. Can't focus on one thing. We got goldfish brains. Or goldfish attention spans. I forget. Everyone's scrolling TikTok while they wait for this earnings call, I suppose. I guess we'll just all wait then. I guess we'll all just wait. Broadcom's at all-time highs, so I don't know what you're talking about. it's literally at all-time highs, so I don't really know what you're talking about. Crypto's going up a little bit. Bitcoin's at 93 right now. A little bit of upside on crypto. I guess we can read this real quick while we wait for the earnings call. Broadcom reported fourth quarter earnings results that beat expectations for earnings and revenue. Issued a strong forecast for current quarter driven by artificial intelligence demand. Stock rose 3% in extended trading. EPS 1.95. Revenue is $18 billion. Broadcom said revenue in fiscal first quarter will be about $19.1 billion, which would represent 28% year-over-year growth, and is higher than the $18.3 billion average analyst estimate. CEO Hock Tan said in a statement that Broadcom expects AI chip sales this quarter to double from a year earlier to $8.2 billion, both from custom AI chips as well as semiconductors for AI networking. Net income climbed 97% to $8.51 billion, or $1.74 per share, from $4.32 billion, or 90 cents per share, in the year ago period. Along with Nvidia, Broadcom has been the other major winner among U.S. semiconductor companies due to the AI boom. Company stock price is up 75% so far in 2025, after doubling last year, as its custom chips such as Google's Tensor processing units are gaining increasing traction in the market as a rival to Nvidia's graphics processing units. In June, Broadcom said it had 3 customers and 4 prospects for its custom AI chips. In September, it said it had its 4th mystery customer who had placed a $10 billion order for custom chips, and separately announced a partnership with OpenAI in October to develop custom chips. Investors are closely watching to see Broadcom confirm that those companies are continuing to engage and are on track to buy and deploy custom chips. Broadcom's overall revenue grew 28% during the quarter, which the company attributed largely to a 74% increase in AI chip sales, which would be equivalent to $8.2 billion in AI revenue during the fourth quarter. AI chip sales are reported in the company's semiconductor solution business, which reported $11.07 billion in sales, up 22% on an annual basis, and topping Street Account's 10.77 billion estimate. Broadcom's other major segments, infrastructure software, reported 26% growth to 6.94 billion in sales, topping Wall Street's expectations. Broadcom said it would issue a per-share dividend of 65 cents, payable later this month, up from 59 cents. Okay, so not much that we already haven't read. 10 years experience in Avgo, job would give you around 1.5 million. Broadcom, Nvidia, Meta, Google, and Robinhood, my main 5. Nice. I go all in GameStop. I hold one stock, and it is GameStop. If you're curious. But that's interesting. You got about 8 minutes till the earnings call starts. We're just waiting. I'm probably the only channel doing the earnings call, so most likely. Make sure you guys hit that like button. Can we get 100 likes? Is there 20 people out there who haven't hit the like button? Can we get 100 likes before the call? Feel like that's doable. Seems like it should be doable. Yeah, thank you, Energy Drink. Thank you. Thank you, Kashif. Thank you, bro. Appreciate it. Greetings, Burn. Welcome. Welcome. Appreciate you being here. Do I think it's going to keep going up? Do you remember that coin flip we did earlier? That's my answer. Flip the coin, and there's your answer for any question you have about stocks, because nobody knows. Nobody knows. Greetings from Oracle Investor. Well, welcome back, William. Welcome back, bro. Welcome back. Appreciate you. You're funny. I'm being dead serious. If you think anyone knows anything about whether a stock is going to go up or down, you are mistaken. Literally, nobody knows what they're talking about. If someone's trying to convince you that they know anything about whether a stock is going to go up or down, they're probably trying to sell you a course. So they have an incentive to tell you that. But literally nobody knows what they're talking about in this market. Everyone's just a gambling degenerate, and they're hoping their bet works out. You can disagree all you want, but I'm right. Anyone who's been in this industry for any real amount of time would agree with me. Nobody knows what they're talking about. So you can disagree all you want, but you're just disagreeing with reality, which most people do. Most people do disagree with reality, which is, you do whatever you want, bro. You do whatever helps you sleep at night. You do whatever helps you sleep at night. Except Michael Burry. Michael Burry's been wrong about many trades. So not a very good example. He's been right in a lot of cases, but he's also lost a lot of trades. So nobody knows. Everybody has an opinion, but nobody knows anything for sure. I don't think there's any better way to put it. That is the best way you could put it. Everyone has an opinion, but nobody knows anything for sure. Yep. That is probably the best way you could put it. Man. And everybody has an opinion. Literally everybody has an opinion. Oh man, and they'll tell you it. They'll tell you it. And if you don't agree with them, oh man. Oh man. It's gonna be Armageddon. Traders selling their strategies can't make money trading, so they teach. Why would bother selling when you could make blank? Yep. Yeah. If your trading strategy was actually profitable, you wouldn't be trying to sell a course or have people join a Discord. You would be on a yacht somewhere, making a bunch of money trading. Let's be real. If someone out there actually had the secret to trading, they wouldn't be on YouTube telling you about it. They wouldn't be on YouTube telling you about it. No one knows the direction in which a stock will move at any given time. Exactly. There's just trading setups that have potential probabilities, and some trading setups have a 60% chance of happening. Some of them have a 40% chance of happening, and you have to know how to trade those different setups properly, or else on a long-term basis you'll probably be a loser. This market is not in your favor. This market is built to take money from you, especially traders. And if they make their course free, that means you're the product. You don't think there are factors that make trades more in your favor? I think it's a game of probabilities. I think you have to know your game and stick to your plan. Of course there's profitable traders out there, but it's a very low percentage of people, so of course. Is this earnings call up? Should be starting here in a minute. Should be starting any minute now. It's just music right now. Alright, enjoy the earnings call. Oh, never mind. I thought it was starting, but apparently not. It should be starting. Michael Douglas. It's Mark Douglas, but that is a pretty good book. That is a pretty good book. They get money by being introducing broker from the brokerage. That's an interesting perspective. You're the only realist, man. Am I beginning to like your topic? I appreciate it, bro. I try to be as realistic as I can be in this market. I've been doing this for a long time, and I've made a lot of money and I've lost a lot of money, you know. When you've actually experienced as much trading as I have, and you've been in this industry for as long as I have, which I haven't even been in this industry that long, like 6 or 7 years maybe. I don't really know. You start to learn that everything's bullshit in a lot of ways, and you decipher what is actually legit and what isn't, and a lot of things are bullshit in this market, unfortunately. A lot of things are bullshit. Take enough beatings and you become realistic. Yes, sir. Or you know, or you get tired of the stress, you know. Trading doesn't just come, it's not just free. It's not easy. It's not easy to stay in the game when you're losing $100 one day and then making 150 the next, and then losing 100 the next, and then, you know, making 50 the next. Like, trading is not a guarantee. And yeah. If you're anything like me, you get sick of worrying about whether the market's going to be up or down, or when to take the trade and when to sell. Like, all that stuff is, I'm over all that stuff. I've been doing that for too long. I like investing. Do I day trade live? I'll take profits when there's profits to be had, but for right now, I just have all my money in GameStop, and it's been working. It's been great. Why isn't this earnings call starting? This earnings call should be live. What the hell? I don't know why this earnings call is not live yet.
Introductions.
Oh, here we go.
I would like to turn the call over to GU, Head of Investor Relations of Broadcom Inc.
Thank you, Cherie, and good afternoon, everyone. Joining me on today's call are Hock Tan, President and CEO, Kirsten Spears, Chief Financial Officer, and Charlie Kawaz, President, Semiconductor Solutions Group. Broadcom distributed a press release and financial tables after the market closed, describing our financial performance for the fourth quarter and fiscal year 2025. If you did not receive a copy, you may obtain the information from the investor section of Broadcom's website at broadcom.com. This conference call is being webcast live, and an audio replay of the call can be accessed for 1 year through the investor section of Broadcom's website. During the prepared remarks, Hock and Kirsten will be providing details of our fourth quarter and fiscal year 2025 results, guidance for our first quarter of fiscal year 2026, as well as commentary regarding the business environment. We'll take questions after the end of our prepared comments. Please refer to our press release today and our recent filings with the SEC for information on the specific risk factors that could cause our actual results to differ materially from the forward-looking statements made on this call. In addition to U.S. GAAP reporting, Broadcom reports certain financial measures on a non-GAAP basis. A reconciliation between GAAP and non-GAAP measures is included in the tables attached to today's press release. Comments made during today's call will primarily refer to our non-GAAP financial results. I'll now turn the call over to Hock.
Thank you, G. And thank you, everyone, for joining us today. Well, we just ended our Q4 fiscal 25, and before I get into details of that quarter, let me recap the year. In our fiscal 2025, consolidated revenue grew 24% year over year to a record $64 billion, and it's driven by AI semiconductors and VMware. AI revenue grew 65% year-over-year to $20 billion, driving the semiconductor revenue for this company to a record $37 billion for the year. In our infrastructure software business, strong adoption of VMware Cloud Foundation, or VCF as we call it, drove revenue growth of 26% year-on-year to $27 billion. In summary, 2025 was another strong year for Broadcom, and we see the spending momentum by our customers in AI continuing to accelerate in 2026. Now let's move on to the results of our fourth quarter 2025. Total revenue was a record $18 billion, up 28% year-on-year, and above our guidance on better than expected growth in AI semiconductors, as well as infrastructure software. Q4 consolidated adjusted EBITDA was a record $12.12 billion, up 34% year-on-year. So let me give you more color on our two segments. In semiconductors, revenue was $11.1 billion as year-on-year growth accelerated to 35%. And this robust growth was driven by the AI semiconductor revenue of $6.5 billion, which was up 74% year-on-year. And this represents a growth trajectory exceeding 10 times over the 11 quarters we have reported this line of business. Our custom accelerator business more than doubled year-over-year as we see our customers increase adoption of XPUs, as we call those custom accelerators, in training their LLMs and monetizing their platforms through inferencing APIs and applications. These XPUs, I might add, are not only being used to train and inference internal workloads by our customers. The same XPUs, in some situations, are being extended externally to other LLM peers. Best exemplified at Google, where the TPUs used in creating Gemini are also being used for AI cloud computing by Apple, Cohere, and SSI as a sample. And the scale at which we see this happening could be significant. And as you are aware, last quarter, Q3 25, we received a $10 billion order to sell the latest TPU Ironwood racks to Anthropic. And this was our fourth custom that we mentioned. And in this quarter, Q4, we received an additional $11 billion order from this same customer for delivery in late 2026. But that does not mean our other two customers are using TPUs. In fact, they prefer to control their own destiny by continuing to drive their multi-year journey to create their own custom AI accelerators or XPU racks, as we call them. And I'm pleased today to report that during this quarter, we acquired a fifth XPU customer through a $1 billion order placed for delivery in late 2026. Now, moving on to AI networking. Demand here has even been stronger as we see customers build out their data center infrastructure ahead of deploying AI accelerators. Our current order backlog for AI switches exceeds $10 billion as our latest 102 terabit per second Tomahawk 6 switch, the first and only one of its capability out there, continues to book at record rates. And this is just a subset of what we have. We have also secured record orders on DSPs, optical components like lasers, and PCI Express switches to be deployed, all to be deployed in AI data centers. And all these components combined with our XPUs bring our total order on hand in excess of $73 billion today, which is almost half Broadcom's consolidated backlog of $162 billion. We expect this $73 billion in AI backlog to be delivered over the next 18 months. And in Q1 fiscal 26, we expect our AI revenue to double year on year to $8.2 billion. Turning to non-AI semiconductors, Q4 revenue of $4.6 billion was up 2% year on year and up 16% sequentially based on favorable wireless seasonality. Year on year, broadband showed solid recovery. Wireless was flat, and all the other end markets were down as enterprise spending continued to show limited signs of recovery. And so accordingly, in Q1, we forecast non-AI semiconductor revenue to be approximately $4.1 billion, flat from a year ago, down sequentially due to wireless seasonality. Let me now talk about our infrastructure software segment. Q4 infrastructure software revenue of $6.9 billion was up 19% year on year, above our outlook of 6.7. Bookings continued to be strong as total contract value booked in Q4 exceeded $10.4 billion versus $8.2 billion a year ago. We ended the year with $73 billion of infrastructure software backlog, up from $49 billion a year ago. We expect renewals to be seasonal in Q1 and forecast infrastructure software revenue to be approximately $6.8 billion. We still expect, however, that for fiscal 26, infrastructure software revenue to grow low double digits percentage. So here's what we see in 2026. Directionally, we expect AI revenue to continue to accelerate and drive most of our growth, and non-AI semiconductor revenue to be stable. Infrastructure software revenue will continue to be driven by VMware growth at low double digits. And for Q1 26, we expect consolidated revenue of approximately $19.1 billion, up 28% year on year. And we expect adjusted EBITDA to be approximately 67% of revenue. And with that, let me turn the call over to Kirsten.
Thank you, Hock. Let me now provide additional detail on our Q4 financial performance. Consolidated revenue was a record $18 billion for the quarter, up 28% from a year ago. Gross margin was 77.9% of revenue in the quarter, better than we originally guided on higher software revenues and product mix within semiconductors. Consolidated operating expenses were $2.1 billion, of which $1.5 billion was research and development. Q4 operating income was a record $11.9 billion, up 35% from a year ago. Now, on a sequential basis, even as gross margin was down 50 basis points on semiconductor product mix, operating margin increased 70 basis points sequentially to 66.2% on favorable operating leverage. Adjusted EBITDA of $12.2 billion, or 68% of revenue, was above our guidance of 67%. This figure excludes $148 million of depreciation. Now a review of the P&L for our two segments, starting with semiconductors. Revenue for our Semiconductor Solutions segment was a record $11.1 billion, with growth accelerating to 35% year-on-year, driven by AI. Semiconductor revenue represented 61% of total revenue in the quarter. Gross margin for our Semiconductor Solutions segment was approximately 68%. Operating expenses increased 16% year-on-year to $1.1 billion on increased investment in R&D for leading-edge AI semiconductors. Semiconductor operating margin of 59% was up 250 basis points year-on-year. Now moving to infrastructure software. Revenue for infrastructure software of $6.9 billion was up 19% year-on-year and represented 39% of total revenue. Gross margin for infrastructure software was 93% in the quarter, compared to 91% a year ago. Operating expenses were $1.1 billion in the quarter, resulting in infrastructure software operating margin of 78%. This compares to operating margin of 72% a year ago, reflecting the completion of the integration of VMware. Moving on to cash flow. Free cash flow in the quarter was $7.5 billion and represented 41% of revenue. We spent $237 million on capital expenditures. Day sales outstanding were 36 days in the fourth quarter, compared to 29 days a year ago. We ended the fourth quarter with inventory of $2.3 billion, up 4% sequentially. Our days of inventory on hand were 58 days in Q4, compared to 66 days in Q3, as we continue to remain disciplined on how we manage inventory across the ecosystem. We ended the fourth quarter with $16.2 billion of cash, up $5.5 billion sequentially on strong cash flow generation. The weighted average coupon rate in years to maturity of our gross principal fixed rate debt of $67.1 billion is 4% and 7.2 years, respectively. Turning to capital allocation. In Q4, we paid stockholders $2.8 billion of cash dividends based on a quarterly common stock cash dividend of 59 cents per share. In Q1, we expect the non-GAAP diluted share count to be approximately 4.97 billion shares, excluding the potential impact of any share repurchases. Now let me recap our financial performance for fiscal year 2025. Our revenue hit a record $63.9 billion, with organic growth accelerating to 24% year-on-year. Semiconductor revenue was $36.9 billion, up 22% year-over-year. Infrastructure software revenue was $27 billion, up 26% year-on-year. Fiscal 2025 adjusted EBITDA was $43 billion and represented 67% of revenue. Free cash flow grew 39% year-on-year to $26.9 billion. For fiscal 2025, we returned $17.5 billion of cash to shareholders in the form of $11.1 billion of dividends and $6.4 billion in share repurchases and elimination. Aligned with our ability to generate increased cash flows in the preceding year, we are announcing an increase in our quarterly common stock cash dividend in Q1 fiscal 2026 to 65 cents per share, an increase of 10% from the prior quarter. We intend to maintain this target quarterly dividend throughout fiscal 26, subject to quarterly board approval. This implies our fiscal 2026 annual common stock dividend to be a record $2.60 per share, an increase of 10% year-on-year. I would like to highlight that this represents the 15th consecutive increase in annual dividends since we initiated dividends in fiscal 2011. The board also approved an extension of our share repurchase program, of which $7.5 billion remains through the end of calendar year 2026. Now moving to guidance. Our guidance for Q1 is for consolidated revenue of $19.1 billion, up 28% year-on-year. We forecast semiconductor revenue of approximately $12.3 billion, up 50% year-on-year. Within this, we expect Q1 AI semiconductor revenue of $8.2 billion, up approximately 100% year-on-year. We expect infrastructure software revenue of approximately $6.8 billion, up 2% year-on-year. For your modeling purposes, we expect Q1 consolidated gross margin to be down approximately 100 basis points sequentially, primarily reflecting a higher mix of AI revenue. As a reminder, consolidated gross margins through the year will be impacted by the revenue mix of infrastructure software and semiconductors, and also product mix within semiconductors. We expect Q1 adjusted EBITDA to be approximately 67%. We expect the non-GAAP tax rate for Q1 and fiscal year 2026 to increase from 14% to approximately 16.5% due to the impact of the global minimum tax and shift in geographic mix of income compared to that of fiscal year 2025. That concludes my prepared remarks. Operator, please open up the call for questions.
Thank you. To ask a question, you will need to press star 11 on your telephone. To withdraw your question, press star 11 again. Due to time restraints, we ask that you please limit yourself to one question. Please stand by while we compile the Q&A roster. Our first question will come from the line of Vivek Arya with Bank of America. Your line is open.
Thank you. Just wanted to clarify, Hock, you said $73 billion over 18 months for AI. That's roughly $50-ish billion plus for fiscal 26 for AI. I just wanted to make sure I got that right. And then the main question, Hock, is that there is sort of this emerging debate about customer-owned tooling. Your racing customers potentially wanting to do more things on their own. How do you see your XPU content and share at your largest customer evolve over the next 1 or 2 years? Thank you.
Well, to answer your first question, what we said is correct, that as of now, we have $73 billion of backlog in place, secured, of XPUs, switches, DSPs, lasers for AI data centers that we anticipate shipping over the next 18 months. And obviously, this is as of now. I mean, we fully expect more bookings to come in over that period of time. And so don't take that 73 as that's the revenue we ship over the next 18 months. We're just saying we have that now, and then the bookings has been accelerating. And frankly, we see that bookings not just in XPUs, but in switches, DSPs, all the other components that go into AI data center. We have never seen bookings of the nature that what we have seen over the past 3 months, particularly with respect to Tomahawk 6 switches. This is one of the fastest growing products in terms of deployment that we ever seen of any switch product that we put out there. It is pretty interesting, and partly because it's the only one of its kind out there at this point at 102 terabits per second, and that's the exact product needed to expand the clusters of the latest GPU and XPUs out there. So that's great. But as far as what is the future as XPU is your broader question, my answer to you is don't follow what you hear out there as gospel. It's a trajectory, it's a multi-year journey, and many of the players, and not too many players doing LLMs, wants to do their own custom AI accelerator for very good reasons. You can put in hardware what if you use a general purpose GPU, you can only do in software and kernels in software. You can achieve performance-wise so much better in a custom purpose designed hardware-driven XPU. And we see that in the TPU, and we see that in all the accelerators we are doing for our other customers. Much better in areas of sparse core, training, inference, reasoning, all that stuff. Now, will that mean that over time they all want to go do it themselves? Not necessarily. And in fact, because the technology in silicon keeps updating, keeps evolving. And if you are an LLM player, where do you put your resources in order to compete in this space? Especially when you have to compete at the end of the day against merchant GPU, who are not slowing down in their rate of evolution. So I see that as this concept of customer tooling is an overblown hypothesis, which frankly, I don't think will happen.
Thank you.
Moment for our next question. And that will come from the line of Ross Seymour with Deutsche Bank. Your line is open.
Hi, thanks for letting me ask a question. Hock, I wanted to go to something you touched on earlier about the TPUs going a little bit more to like a merchant go-to-market to other customers. Do you believe that's a substitution effect for customers who otherwise would have done ASICs with you, or do you think it's actually broadening the market? And so what are kind of the financial implications of that from your perspective?
That's a very good question, Ross. And what we see right now is the most obvious move it does is it goes the people who use, say, TPUs, the alternative is GPUs, merchant basis. That's the most common thing that happens. Because to do that substitution for another custom, it's different. To make an investment in custom accelerator is a multi-year journey. It's a strategic directional thing. It's not necessarily a very transactional or short-term move. Moving from GPU to TPU is a transactional move. Going into AI accelerator of your own is a long-term strategic move, and nothing will deter you from that to continuing to make that investment towards that end goal of successfully creating and deploying your own custom AI accelerator. So that's the motion we see.
Thank you.
And that will come from the line of Harlan Sur with JP Morgan.
Yeah, good afternoon. Thanks for taking my question, and congratulations on the strong results, guidance, and execution. Hock, again, I just want to sort of verify this, right? So you talked about total AI backlog of $73 billion over the next 6 quarters, right? This is just a snapshot of your order book, like right now. But given your lead times, I think customers can and still will place orders for AI in quarters 4, 5, and 6. So as time moves forward, that backlog number for more shipments in second half of 26 will probably still go up, right? Is that the correct interpretation? And then given the strong and growing backlog, right, the question is, does the team have 3 nanometer, 2 nanometer wafer supply, CoWoS, substrate, HBM supply commitments to support all of the demand in your order book? And I know one of the areas where you are trying to mitigate this is in advanced packaging, right? You're bringing up your Singapore facility. Can you guys just remind us what part of the advanced packaging process the team is focusing on with the Singapore facility? Thanks.
Thanks. Well, to answer your first simpler question, you're right. You can say that $73 billion is the backlog we have today to ship over the next 6 quarters. You might also say that, and given our lead time, we expect more orders to be able to be absorbed into our backlog for shipments over the next 6 quarters. So take it that we expect revenue, a minimum revenue, one way to look at it, of $73 billion over the next 6 quarters, but we do expect much more as more orders come in for shipments within that next 6 quarters. Our lead time, depending on the particular product it is, can be anywhere from 6 months to a year. With respect to supply chain, is what you're asking, critical supply chain on silicon and packaging. Yeah, that's an interesting challenge that we have been addressing constantly and continue to. And with the strength of the demand and the need for more innovative packaging, advanced packaging, because you're talking about multi-chips in creating every custom accelerator now, the packaging becomes a very interesting and technical challenge. And building our Singapore fab is to really talk about partially insourcing those advanced packaging. We believe that we have enough demand, we can literally insource, not from the viewpoint of not just costs, but in the viewpoint of supply chain security and delivery. And we're building up a fairly substantial facility for packaging, advanced packaging in Singapore, as you indicated, purely for that purpose, to address the advanced packaging side. Silicon-wise, now we go back to the same pressure source in Taiwan, TSMC. And so we keep going for more and more capacity in 2 nanometers, 3 nanometers, and so far we do not have that constraint. But again, time will tell as we progress and as our backlog builds up.
Thank you, Hock.
One moment for our next question. The next question will come from the line of Blayne Curtis with Jefferies. Your line is open.
Hey, good afternoon. Thanks for taking my question. I wanted to ask, with the original $10 billion deal, you talked about a rack sale. I just wanted to, with the follow-on order as well as the 5th customer, can you just maybe describe how you're going to deliver those? Is it an XPU or is it a rack? And then maybe you can kind of just walk us through the math and kind of what the deliverable is. Obviously, Google uses its own networking, so I'm kind of curious too. Would it be a copy exact of what Google does? Now you could talk to it to name, or would you have your own networking in there as well? Thanks.
That's a very complicated question, Blayne. Let me tell you what it is. It's a system sale. How about that? It's a real system sale. We have so many components beyond XPUs, custom accelerators in any system, in AI system, any AI system used by hyperscalers, that, yeah, we believe it begin to make sense to do it as a system sales and be responsible, but be fully responsible for the entire system or rack, as you call it. I think people understand it as a system sale better. And so on this customer number 4, we are selling it as a system with our key components in it. And that's no different than selling a chip. We certify and final ability to run as part of the whole selling process.
Okay, thanks, Hock.
One moment for our next question. And that will come from the line of Stacy Rasgon with Bernstein. Your line is open.
Hi, guys. Thanks for taking my question. I wanted to touch on gross margins, and maybe it feeds into a little bit the prior question. So I understand why the AI business is somewhat diluted to gross margins. We have the HBM pass-through, and then presumably with the system sales, that will be more diluted. And you've hinted at this in the past, but I was wondering if you could be a little more explicit. As this AI revenue starts to ramp, as we start to get system sales, how should we be thinking about that gross margin number, say, if we're looking out, 4 quarters or 6 quarters? Is it low 70s? I mean, could it start with a 6 at the corporate level? And I guess I'm also wondering, I understand how that comes down, but what about the operating margins? Do you think you get enough operating leverage on the OpEx side to keep operating margins flat, or do they need to come down as well?
I'll let Kirsten give you the details, but enough for me to broadly, high level, explain to you, Stacy. And good question. Phenomenal. You don't see that impacting us right now, and we have already started that process of some system sales. You don't see that in our numbers, but it will. And we have said that openly. The AI revenue has a lower gross margin than obviously, the rest of our business, including software, of course. But we expect the rate of growth as we do more and more AI revenue to be so much that we get the operating leverage on our operating spending, that operating margin will deliver dollars that are still a high level of growth from what it has been. So we expect operating leverage to benefit us at the operating margin level, even as gross margin will start to deteriorate. High level.
No, I think Hock said that fairly. And the second half of the year, when we do start shipping more systems, the situation is straightforward. We'll be passing through more components that are not ours. So think of it similar to the XPUs, where we have memory on those XPUs, and we're passing through those costs. We'll be passing through more costs within the rack, and so those gross margins will be lower. However, overall, the way Hock said it, gross margin dollars will go up, margins will go down, operating margins, because we have leverage, operating margin dollars will go up, but the margin itself as a percentage of revenues will come down a bit. But we'll guide closer to, the end of the year for that.
Got it. Thank you, guys.
One moment for our next question. That will come from the line of Jim Schneider with Goldman Sachs. Your line is open.
Good afternoon. Thanks for taking my question. Hock, was wondering if you might care to calibrate your expectations for AI revenue in fiscal 26 a little bit more closely. I believe you talked about acceleration in fiscal 26 off of the 65% growth rate you did in fiscal 25, and then you're guiding to 100% growth for Q1. So I'm just wondering if the Q1 is a good jumping off point for the growth rate you expect for the full year, or something maybe a little bit less than that. And then maybe if you could separately clarify whether your $1 billion of orders for the fifth customer is indeed OpenAI, which you made a separate announcement about. Thank you.
Wow, there's a lot of questions here. But let me start off with 26. Our backlog is very dynamic these days, as I said, and it is continuing to ramp up. And you're right. We originally, 6 months ago, said maybe year-on-year AI revenues would grow in 26, 60, 70%. Q1, we double. And Q1 26 today, we're saying it's double. And when we're looking at it, because all the fresh orders keeps coming in, and we give you a milestone of where we are today, which is $73 billion of backlog to be shipped over the next 18 months. And we do fully expect, as I answered the earlier question, for that $73 billion over the 18 months to keep growing. Now, it's a moving target. It's a moving number as we move in time, but it will grow. And it's hard for me to pinpoint what 26 is going to look like precisely. So I'd rather not give you guys any guidance, and that's why we don't give you guidance, but we do give it for Q1. Give it time, we'll give it for Q2, and you're right. To us, is it an accelerating trend? And my answer is, it's likely to be an accelerating trend as we progress through 26. Hope that answers your question.
Yes, thank you.
One moment for our next question. And that will come from the line of Ben Reitzes with Melius Research. Your line is open.
Yeah, hey guys, thanks a lot. Hey Hock. I wanted to ask, I'm not sure if the last caller said something on it, but I didn't hear it in the answer, was wanted to ask about the OpenAI contract. It's supposed to start in the second half of the year and go through 2029 for 10 gigawatts. I'm going to assume that that's the fifth customer order there. And I was just wondering if you're still confident in that being a driver. Are there any obstacles to making that a major driver? And when you expect that to contribute and your confidence in it? Thanks so much, Hock.
You didn't hear that answer from my last caller, Jim's question, is because I didn't answer it. I did not answer it, and I'm not answering it either. It's the fifth customer, and it's a real customer, and it will grow. They are on their multi-year journey to their own XPUs, and let's leave it at that. As far as the OpenAI view that you have, we appreciate the fact that it is a multi-year journey that will run through 29 as our press release with OpenAI showed. 10 gigawatts between 26, more like 27, 28, 29, Ben, not 26. It's more like 27, 28, 29, 10 gigawatts. That was the OpenAI discussion. And that's, I call it an agreement, an alignment of where we're headed with respect to a very respected and valued customer, OpenAI. But we do not.
That's real interesting.
We do not expect much in 26.
Okay. Thanks for clarifying that. That's real interesting. Appreciate it.
One moment for our next question. And that will come from the line of C.J. Muse with Cantor Fitzgerald. Your line is open.
Yeah, good afternoon. Thank you for taking the question. I guess, Hock, I wanted to talk about custom silicon and maybe speak to how you expect content to grow for Broadcom generation to generation. And as part of that, your competitor announced CPX offering essentially accelerator for an accelerator for massive context windows. I'm curious if you see it a broadening opportunity, for your existing 5 customers to have multiple XPU offerings. Thanks so much.
Thank you. No, yeah, you hit it right on. I mean, the nice thing about a custom accelerator is you try not to do one size fits all and generationally. Each of these 5 customers now can create their version of chip of an XPU, a custom accelerator for training and inference. And basically, it's almost 2 parallel tracks going on almost simultaneously for each of them. So I would have plenty of versions to deal with. I don't need to create any more versions. We got plenty of different content out there just on the basis of creating these custom accelerators. And by the way, when you do custom accelerators, you tend to put more hardware in that are unique, differentiated, versus trying to make it work on software and creating kernels into software. I know that's very tricky too, but think about the difference where you can create in hardware those sparse core data routers versus the dense matrix multipliers, all in one same chip. And that's just one example of what creating custom accelerators is letting us do. Or for that matter, a variation in how much memory capacity or memory bandwidth for the same customer from chip to chip, just because even in inference, you want to do more reasoning versus decoding versus something else like pre-fill. So you literally start to create different hardware for different aspects of how you want to train or inference and run your workloads. It's a very fascinating area, and we are seeing a lot of variations and multiple chips for each of our customers.
Thank you.
One moment for our next question. And that will come from the line of Harsh Kumar with Piper Sandler. Your line is open.
Yeah, Hawk and team, first of all, congratulations on some pretty stunning numbers. I've got an easy one and a more strategic one. The easy one is your guide in AI, Hawk and Kirsten, is calling for almost $1.7 billion of sequential growth. I was curious, maybe you could talk about the diversity of the growth between the three existing customers. Is it pretty well spread out, all of them growing, or is one sort of driving much of the growth? And then, Hawk, strategically, one of your competitors bought a photonic fabric company recently. I was curious about your take on that technology and if you think it's disruptive or you think it's just gimmickry at this point in time.
I like the way you address this question, the way that you address the question to me. It's almost hesitant. Thank you. I appreciate that. But on your first part, yeah, we're driving growth, and it begins to feel like this thing never ends. And it's a real mixed bag of existing customers and on existing XPUs, and a big part of it is XPUs that we're seeing. And that's not to slow down the fact that, as I indicated in my remarks and commented on, the demand for switches, not just among 6, among 5 switches, the demand for our latest 1.6 terabit per second DSPs that enables optical interconnects for scale out, particularly. It's just very, very strong. And by extension, demand for the optical components like lasers, pin diodes, just going nuts. All that come together. Now, all that is small, relatively lesser dollars when it comes to XPUs, as you probably guess. I mean, to give you a sense, maybe let me look at it on a backlog side. Of the $73 billion of AI revenue backlog over the next 18 months I talk about, maybe $20 billion of it is everything else. The rest is XPUs. Hope that gives you a sense for what the mix is. But that's also the rest is still $20 billion. That's not small by any means. So we value that. So when you talk about your next question of silicon photonics and as a means to create basically much better, more efficient, lower power interconnects in not just scale out, but hopefully scale up. Yeah, I could see a point in time in the future when silicon photonics matters as the only way to do it. We're not quite there yet, but we have the technology and we continue to develop the technology. And even as each time we develop it first for 400 gigabit bandwidth, going on to 800 gigabit bandwidth, not ready for it yet. Now, and even we have the product, and we now are doing it for 1.6 terabit bandwidth to create silicon photonics switches, silicon photonics interconnects. Not even sure it will get fully deployed because, our engineers, our peers, and the peers we have out there will somehow try to find a way to still try to do scale up within a rack in copper as long as possible, and in scale out in pluggable optics. The final straw is when you can't do it well in pluggable optics, and of course when you can't do it even in copper, then you're right, you go to silicon photonics. And it will happen, and we're ready for it. Just saying, not anytime soon.
Thank you, Hawk.
One moment for our next question. That will come from the line of Karl Ackerman with BNP Paribas. Your line is open.
Yes, thank you. Hock, could you speak to the supply chain resiliency and visibility you have with your key material suppliers, particularly CoWoS, as you not only support your existing customer programs, but the two new custom compute processors that you announced inter-quarter? I guess what I get at is you also happen to address the very large subset of networking and compute AI supply chains. You talked about record backlog. If you were to pinpoint some of the bottlenecks that you have, the areas that you're aiming to address and mitigate some supply chain bottlenecks, what would they be, and how do you see that ameliorating into 26? Thank you.
It's across the board, typically. I mean, we are very fortunate in some ways that we have the product technology and the operating business lines to create multiple key leading-edge components that enables today's state-of-the-art AI data centers. I mean, our DSP, as I said earlier, is now at 1.6 terabit per second. That's the leading edge connectivity for bandwidth for the top of the heap, XPU and even GPU, and we intend to be that way. And we have the lasers, EMLs, VCSELs, CW with lasers that goes with it. So it's fortunate that we have all this and the key active components that go with it. And we see it very early, and we expand the capacity as we do the design to match it. And this is a long answer to what I'm trying to get at, which is, I think we are of any of these data center suppliers of the system racks, not counting the power shell and all that. Now that starts to get beyond us on the power shell and the transformers and the gas turbines. If you just look at the racks, the systems on AI, we probably have a good handle on where the bottlenecks are, because sometimes we are part of the bottlenecks, which we then work to get to resolve. So we feel pretty good about that through 2026.
Thank you.
One moment for our next question. That will come from the line of Christopher Rolland with Susquehanna. Your line is open.
Hi, thanks for the question. Just first a clarification and then my question. And sorry to come back to this issue, but if I understand you correctly, Hock, I think you were saying that OpenAI would be a general agreement, so it's not binding, maybe similar to the agreements with both NVIDIA and AMD. And then secondly, you talked about flat non-AI semiconductor revenue. Maybe what's going on there, is there still an inventory overhang, and what do we need to get that going again? Do you see growth eventually in that business? Thank you.
Well, on the non-AI semiconductor, we see broadband literally recovering very well. And we don't see the others. No, we see stability. We don't see a sharp recovery that is sustainable yet. So I guess given a couple more quarters, but we don't see any further deterioration in demand. And it's more, I think maybe the AI is sucking the oxygen a lot out of enterprise spending elsewhere and hyperscaler spending elsewhere. We don't see it getting any worse. We don't see it recovering very quickly, with the exception of broadband. That's a simple summary of non-AI. With respect to OpenAI, without diving into Dave, I'm just telling you what that 10 gigawatt announcement is all about. Separately, the journey with them on the custom accelerator progresses at a very advanced stage and will happen very, very quickly. And it will have a committed element to this whole thing. And that won't. But what I was articulating earlier was the 10 gigawatt announcement. And that 10 gigawatt announcement is an agreement to be aligned on developing 10 gigawatts for OpenAI over 27 to 29 timeframe. That's it. That's different from the XPU program we're developing with them.
I see. Thank you very much.
Thank you. And we do have time for one final question, and that will come from the line of Joe Moore with Morgan Stanley. Your line is open.
Great. Thank you very much. So if you have $21 billion of rack revenue in the second half of 26, I guess, do we stay at that run rate beyond that? Are you going to continue to sell racks, or does that type of business make shift over time? And I'm really just trying to figure out the percentage of your 18-month backlog that's actually full systems at this point.
Well, it's an interesting question. And that question basically comes to how much compute capacity is needed by our customers over the next, as I say, over the period beyond 18 months. And your guess is probably as good as mine based on what we all know out there, which is really what it relates to. But if they need more, then you see that continuing even larger. If they don't need it, then probably it won't. But as of what we're trying to indicate is that's the demand we're seeing over that period of time right now.
Thank you.
I would now like to turn the call back over to GU for any closing remarks.
Thank you, operator. This quarter, Broadcom will be presenting at the New Street Research Virtual AI Big Ideas Conference on Monday, December 15th, 2025. Broadcom currently plans to report its earnings for the first quarter of fiscal year 2026 after close of market on Wednesday, March 4th, 2026. A public webcast of Broadcom's earnings conference call will follow at 2 p.m. Pacific. That will conclude our earnings call today. Thank you all for joining. Operator, you may end the call.
This concludes today's program. Thank you all for participating. You may now disconnect.
Thank you for that, operator. Thank you. Thank you. Thank you. Well, that was exciting. Isn't it crazy how bearish people are in this market? The second it started going down, the stream numbers went crazy, bro. There are so many bearish people. That's wild, bro. I mean, it's mostly people bearish on AI because they all suck off Michael Burry, but it's crazy how many bearish people are in this market right now. You know, someone like me likes to bet against the majority, so you know. It's pretty interesting. It's pretty interesting. Obviously, I would yeah. AI is a weird thing in the market right now, but I don't know. It's just wild how many bearish people there are. It's actually wild. I've been streaming for a long time, and the bearishness right now is very high, and it's pretty wild. Pretty wild. But that was fun. That was a good time. Hope you guys enjoyed that. Make sure you hit the like button on your way out, and if you're interested in earnings calls or earnings research, interested in the stock market business, make sure you subscribe because we do these earnings streams whenever there's earnings, which lately is every day. So if you're interested in earnings, make sure you subscribe. Have a good one, Dude Guy Show. Appreciate you stopping in. Already subscribed. Hey, good seeing you again, William. Appreciate you, bro. Appreciate you stopping in again.
Hey, you have a good one, Jong. You have a good one, bro. Thanks for stopping in. Your Christmas is fucked. Well, maybe you shouldn't YOLO on stocks. If you can't handle the opposite side of the bet, I don't know why you're even betting. I saw cruise lines were up a bunch. I don't really know what's going on there, but cruise lines crushed today. I don't really pay attention to these things, but I just noticed they were up a lot during the earnings call. I don't know why. I don't think they had like earnings or anything. Maybe they had earnings in the morning. I'm not sure why. Not sure why. They are crushing though. I guess Costco did pretty good on earnings as well. We can read a little bit about it before we go. Let's see. Costco on Thursday surpassed Wall Street's quarterly expectations and posted year-over-year sales growth of 8.2%. The retailer attracted more digital sales and opened new locations. Warehouse Club does not share a full-year outlook. On the company's earnings call, CFO Gary Millerchip said e-commerce gains were one of the strengths of the quarter. Digital sales jumped by 20.5% year over year. Traffic on its website increased 24% year over year, and traffic on its app shot up 48%. Same-day delivery service offered through Instacart in the US and Uber and DoorDash internationally grew at a faster pace than overall digital sales. Costco had a positive start to the busiest week of the holiday season. Millerchip said Black Friday was a record-breaking day for the Warehouse Club US e-commerce business, generating over $250 million in non-food orders. EPS was 4.5 versus 4.27 expected. Revenue is $67.31 billion versus $67.14 billion, so they like barely beat revenue. But still, Costco's crushing. Costco has attracted new members and higher sales at its clubs and online as U.S. consumers across incomes seek value while shopping for groceries, household essentials, holiday gifts, and more. Along with its Warehouse Club competitors, Costco has gained traction with younger customers who are signing up for memberships. Costco has also benefited from a membership fee increase in the U.S. and Canada, which took effect in September 2024. And kicked in as new members signed up or as existing customers renewed their annual memberships when they lapsed. In the 3-month period that ended November 23rd, Costco's net income rose to $2 billion or 4.5 per share from $1.8 billion or 4.04 per share in the year-ago quarter. Revenue increased to $67.31 billion from $62.15 billion in the year-ago quarter. Comparable sales, an industry metric that takes out the impact of one-time factors like store openings and closures, increased 5.9% in the US and 6.4% across the globe. Sales in non-food were led by pharmacy, gold, jewelry, tires, small electrics, and apparel, which grew by double digits year over year, Millerchip said. No, but you are. That's why you typed that in my chat. In the first quarter, Costco opened 8 new warehouse clubs, including a relocation in Canada, its 3rd location in France, 4 new locations in the US, and 2 additional Canadian business centers. CEO Ron Vacres said on the company's earnings call, business centers tend to sell bulk items intended for restaurants and other types of business. Those additional locations bring its total store count to 921 around the world. He said the company plans to continue to open 30 or more clubs per year in the future years. As a warehouse club, Costco relies on membership fees to boost its revenues and help keep the prices low on items. With higher tariffs, however, the retailer has dealt with rising costs. About a third of Costco's U.S. sales come from imported goods. Inflation remained relatively consistent with recent quarters, Miller Chip said. He said in grocery, Costco saw higher inflation in commodities such as beef, seafood, and coffee, but that was offset by lower inflation in eggs, cheese, butter, and produce. In non-food, he said Costco saw low single-digit inflation for the third consecutive quarter, primarily driven by gold and imported goods. Miller Chip said on the earnings call that Costco has looked for ways to reduce the impact of the duties, including sourcing more items from the U.S., consolidating buying across the globe, to lower the cost of goods and swapping out categories or items to ones that aren't as exposed to steep tariff costs. Its private label Kirkland Signature is another way to offset tariff prices because it has more control over the supply chain. In late November, Costco sued the Trump administration to get a full refund of new tariffs that it has paid so far this year, and to block those import duties from being collected from the company as it waits for a Supreme Court ruling on the duties. As of the end of the quarter, Costco had 81.4 million total paid members, up 5.2% year over year, and 145.9 million cardholders, up 5.1% year over year. Miller Chip said its renewal rate in the US and Canada was 92.2%. Holy shit, that's so high. That's impressive. And its worldwide rate was 89.7%. That's so impressive. Slipping a bit as more customers sign up for memberships online and those members renew at a slightly lower rate. As of Thursday's close, Costco shares have declined nearly 4% so far this year. That trails the S&P 500's 17% gain during the same period. However, over the past 5 years, Costco stock has jumped by 141%. Company stock closed at $884.48 on Thursday, bringing its market value to $392.67 billion. Wow. That's crazy. 92% renewal rate on their memberships. Like, that's really impressive. I feel like that's really impressive. We'll read the Lululemon one. There we go. But after this, I'm probably out of here. Doesn't look like there's any OGs in the chat, or I don't know. If there's something you guys want to talk about, leave it in the chat, but I'm reading this article and then probably leaving. And maybe I'll come back for the game awards, but probably not. Okay, so Lululemon announced Thursday its CEO Calvin McDonald will step down effective January 31st, following more than a year of underperformance at the athleisure company. Company's board of directors is working with a leading executive search firm to identify its next CEO. It said in the news release McDonald's will stay on as a senior advisor through March 31st. The timing is right for a change. McDonald said on a call with analysts, "I've described being CEO of Lululemon as my dream job. It truly has lived up to every expectation and given me the opportunity of a lifetime." Lululemon's CFO Megan Frank and Chief Commercial Officer Andre Mastrini will serve as interim co-CEOs during the search process. Company's board chair Marty Morfitt will also take on the expanded role of executive chair. In a statement, she said the company had strong foundation in place, but needs a new leader that can guide it through a transition. Oh, what's up, Muma? Playing Arc Raiders? Oh, nice. As we look in the future, the board is focused on identifying a leader with a track record of driving companies through periods of growth and transformation to guide the company's next chapter of success. Shares rose about 10% in extended trading. Leadership change follows more than a year of underperformance at Lululemon and calls for change from its founder and its largest independent shareholder, Chip Wilson. 2 months ago, he took out a full-page ad in the Wall Street Journal saying the company is in a nosedive and it needed to stop chasing Wall Street at the expense of the customers. Lululemon announced McDonald's departure on the same day it posted fiscal third quarter earnings and another round of weak guidance. Here's how the company did compared to Wall Street. 2.59 EPS versus 2.25 EPS. Revenue $2.57 billion versus $2.48 billion. Company's reported net income for the 3-month period that ended November 2nd was $306.84 million, or $2.59 per share, compared with $351.87 million, or $2.87 per share a year earlier. Sales rose to $2.57 billion, up from $2.4 billion a year earlier. For Lululemon's current quarter, McDonald's said the company is encouraged by its early performance so far this holiday season. Though guidance fell short of Wall Street estimates, it anticipates sales will be between $3.5 billion and $3.59 billion, largely below expectations of $3.6 billion. It's expecting earnings per share to be between 4.66 and 4.76, well short of expectations of 5.03. In the previous 2 quarters, Lululemon cuts its full-year guidance on Thursday. More than a month into the final quarter of the year, it raised its full-year expectations again, and now anticipates sales will be between $10.96 billion and $11.05 billion, in line with expectations at the low end. It expects earnings per share to be between 12.92 and 13.02, roughly in line with estimates of about 13. Company saw strong demand during its Thanksgiving weekend, which allowed it to clear through stale inventory at a discount. I also want to acknowledge we've seen trends slow a bit since Thanksgiving, which we've taken into account in our Q4 guidance. However, despite this, we expect revenue trends in the US in Q4 to be modestly improved relative to Q3. Lululemon's business has been under pressure over the last year as it navigates the impact of tariffs, a shaky US consumer, and a product assortment that failed to wow shoppers in the same way it once did. It's also facing steep competition in the athleisure space from upstarts like Vori and Alo Yoga, as well as change in consumer preferences. Instead of yoga pants, these days many shoppers are reaching for denim. Interesting. I don't know what the hell these are, though. Vori and Alo Yoga? I've never heard of that. To drive growth and reach a wider audience, Lululemon has been working to expand its business internationally and offer shoppers a wider assortment. Instead of just workout gear, Lululemon has expanded into shoes, outerwear like coats and jackets, and casual pants that can be worn at work. Company's overall business is growing, but the expansion has largely come from its international business and new store openings. Its largest market, the Americas, has been declining. That seems to be a very similar story to a lot of things. Or wait, never mind, we read about this. I forgot about that. Anyway, during the quarter, revenue in the Americas decreased 2%, with comparable sales down 5%, while international sales jumped 33%. Comparable sales abroad increased 18%. Lululemon is also being hit by the end of the de minimis exemption, which allowed low-value packages to enter the U.S. duty-free a bit more acutely than its peers. In September, it said it expects tariffs to hit its full-year profits by $240 million, and most of those costs will come from the de minimis exemptions ending. Following progress with vendor negotiations and other mitigation efforts, it now expects tariffs to reduce its profits by $210 million. Wow, that's crazy. That's pretty wild. What's up, Elvis? Accumulating Lulu and Avgo. Nice. That's chill. That's pretty chill. I don't know if I want to stream the Game Awards. I feel like there's going to be too many people streaming the Game Awards. Doesn't seem like it'd be a good... Yeah, even Penguins is streaming the Game Awards, so I'm probably not going to stream that. Doesn't seem like in my best interest. Doesn't seem like it would be in my best interest to stream that. There's too many people streaming it. Too many people. But yeah, those are your... I mean, you had RH earnings as well, but I don't think anyone cares about that. Costco's pretty interesting, and that's the first time I've actually read about Lululemon, so that was kind of cool. When am I going live next? What's today? Thursday? Probably next week. I don't know if I'll go live tomorrow. I don't know if there'll be anything to talk about. Yeah, there's nothing to talk about tomorrow, so I don't know if I'll go live tomorrow or not. I guess it'll depend if there's something to actually talk about. Nothing on Monday either. Nothing on Tuesday. You got Micron on Wednesday. I'll be here for sure Wednesday. What's Lenar? Never heard of this. Wait, I think I actually have heard of this, but... Oops. Wrong thing. It's like autopilot to type that in, I swear. See, I don't think this would be a good stream. Nobody's gonna care about this thing. This thing is booty cheeks, it looks like. Yeah, I don't know. Wednesday for sure. But before that, I couldn't. It's gonna be, I guess we'll just play it by ear. I mean, I can't, there's nothing to stream about, so I can't promise that I'll be here on tomorrow, Monday, or Tuesday. So Wednesday might be the next stream, unless there's something like a piece of news or something to talk about. So I would expect Wednesday. But I'll try to, we'll see. We do have those GameStop articles, so I could hop on for like an hour and, make a stream clip real quick, talk about whatever other news is out. So maybe we'll stream. I don't feel like I need to only stream when there's earnings. I still want to stream normal. It's just when there's nothing to talk about, when nothing's going on, no one's here, But yeah. For sure Wednesday though. I'll say for sure Wednesday, and then maybe. The rest of the days are a maybe. But for sure on Wednesday. But I'll probably get on tomorrow, because I don't know, let's see how that stream clip's doing. Let's see how that stream clip is doing. I mean, the stream clip's crushing, dude. Like, I might hop on just to make another stream clip. I mean, it's not crushing, it's literally got 50 views, but like, 50 views is decent, honestly. Especially if it keeps getting views over time. Like, that's the most important thing. It doesn't really matter the initial views. It's just, is it going to keep getting views over time? And it seems like people are interested in these GameStop videos. Seems like it. Even if they're just like simple stream clips. So, yeah, I'll probably hop on tomorrow, make a stream clip. Might as well. I gotta go make a YouTube short after this. Varley! What's up, Varley? What's up, Varley? Good to see you, bro. You're coming in a little late. I'm about to get out of here in a little bit. But glad to see you stop in, my friend. I hope you're doing good. So yeah, maybe I'll run like an hour stream on Monday or Friday, Monday, Tuesday, and then, do our normal earning streams for Micron. But no guarantees. But I think I want to make another stream clip, so most likely I'll be live tomorrow for at least like an hour. And it'll probably be like the same time, the final hour of the market. I think that's a good schedule for me, honestly, because I can go hit the gym. I actually lifted for the first time in like, it's been a while, like at least like 3 weeks, I feel like. I actually lifted for the first time today. And I forgot why I liked lifting so much. It kind of reminded me why I like lifting. So I might be getting back into the weights, bro. I might be getting back into the weights. Pretty excited. But yeah, the later streams are better for me for sure. Like I want to just like wake up and start streaming, but like mentally it's so hard to do that. If I like wake up in a bad mood or something and I start the stream, it just never turns out good. Like literally, it just never turns out good. So it's actually pretty nice to be able to start the streams later in the day. 'Cause I can change my mood pretty easily. But I guess I'm out of here. So thank you guys for being here today, especially all the OGs. Thank you guys for always supporting the stream, for real. I appreciate you. Shout out to the new people. Thanks for giving the stream another chance if you're newer here. And hopefully we see you again if you've never been here before. I appreciate you guys. Thank you again. God bless ya. And I'll see you tomorrow, most likely. But if not tomorrow, I'll see you on Wednesday. Later!